Hello, everybody. How are you doing? And Martha, are you there? I just want to do a quick audio check.
Hi, Ken. This is Mel. I'm Martha Stokes' assistant. Martha should be joining us shortly from the panelist link that you sent.
Okay, great. Well, look forward to it. And we'll get started in just around 10 minutes.
Great. I'm glad I got on early. Am I able to record, or will you be able to send us the recording?
Yeah, I'm having them. We have an open mic, so the current participants can hear us speak, FYI. But yeah, I had a Zoom automatically record it. So
Okay, great.
all right. Well, hello for those of you traders who are here early. We're really pleased to have some top level folks with us today. Martha Stokes, Anka Metcalf, Norm Hallett, Harry Boxer, Steve Nissen, Tom Sosnoff, and myself. So we've got a long session, hopefully a good one at 30 minutes each. So. Oh, hi, thanks, Barry. Yeah, I'm using my Shure Super 55, the Larry King mic. Let's see, where's the video comes through okay. Can you guys see video from me or no? Oh, video okay? I don't see myself. It's odd. Well, anyway. Cut the camera off. So good to see everybody here. We'll get underway in just under 10 minutes. Oh, hey, Martha. Hey, how you doing? Good to see you, Ken. Yes, I'm using, I'll put this up. I'm very much old school, so I like classic mics like that one. Anyway, good to see everybody here. We'll be getting underway in just a few minutes with today's broadcast. It's interesting. There's no picture of me anywhere. So I don't know what I look like. Well, hopefully it looks good. Anyway, thanks for being here, folks. We've got hundreds of people registered for today's event, so we look forward to having you all here. We are recording it, so there will be a recording available later. It's an all-star lineup as usual, and we're gonna be doing these more often moving forward. I wanna catch up and do these maybe every 3 to 4 weeks. So we'll be doing monthly multi-speaker events at a minimum, and maybe move to either 3 or even 2 weeks, probably every 3 to 4 weeks. So look forward to that for the balance of this year and all next year. I don't know if there's any fellow musicians out there. What a market day, right? And a gap continuation in our S&P. Spiders up nicely. I give alerts for things like SOXL. It's a great leveraged ETF. Starbucks really got some caffeine right. Gap from 77 to 90. Wow, boom. Gap continuations are my favorite pattern. So for what it's worth. Okay, Martha, I asked you to unmute, so it should prompt you to say something like open, do you want to speak? So Martha, can you speak? Just doing a quick
Yes,
audio check.
can you hear me?
Yeah, you're coming through loud and clear. Thanks.
Can you see my screen? Because I don't know how to open my screen up.
Oh, okay. Let's see.
I could start the video on my side.
Let's
That
see.
may,
I will make you a co-host. I'll elevate you to co-host, and maybe you can now click on the video icon, or I'm sorry, the screen sharing icon. So in your interface, there should be the word share in the bar that has all the icons on it. It should be a green arrow with the sign share on it.
okay, can you see me now?
Yeah, there you go. Perfect.
All righty, perfect. All right, great, awesome.
Looks good.
All
Technology is
right,
great
thank
when
you.
it works. It's a challenge figuring this stuff out, right? It's always something.
Yeah.
Seriously, it's always something with technology. Tech is it's great when it works. Yeah, I'm looking
Eh,
forward to seeing your presentation. I know you're top notch, so I'm looking forward to it. Yeah.
Thank you. Well, yeah, I can get pretty exciting. I'm like a fire hose.
Yeah. Well, that's the thing, I've been doing this since '99 and I never get tired of the markets. It's all these years later. I still love trading and training, and it's like a new puzzle every day, right? So
There's a lot going on right now. We're going to be talking about market structure and the inner market workings and things that people don't really know. I get on the internet and I'm going, that's not right.
right. Yeah.
There-
There's
Yeah.
And that's why it's good working with real experts like yourself, because there's so much bad information out there. With people like you and I, we have to set things straight so people get the truth, because that makes a big difference. So looking forward to it.
Okay, great.
I will introduce you in just a few minutes, and then I'll take it away.
I also have my camera on in case you want to use that.
Okay. Well, yeah, I don't know how to. Let me see. Let me turn it on. I think that's something you have to do on your end, maybe on the camera icon where it says video, and there's a red line through the camera. Yeah, there you go. We can see. There you go.
All right. I just like to have people see me when I'm talking because it's more and pleasant for them. So, all right, great.
Yeah, I agree. Yeah, it personalized it. Okay, well, we'll get started here in just 3 minutes. I'll introduce you and take it away. So looking forward to it. Now,
Thank
usually
you.
with these, just to mention, we don't really have time for Q&A with audience. So traders, if you do have questions, I ask you to direct them at the websites of the speakers directly to them, but we don't have time. It's in a 30-minute fast format, so we have to keep things on the clock. So traders do feel free to ask questions offline, but not during the webinar, if that's okay. I love questions, but in a 30-minute format, I find that eats up like half the presentation if we let it. So, and we'd rather hear what you get to say. So, okay, well, 2 minutes, traders, and looking forward to working with you. We've got the all-star lineup here today, and great to have Martha Stokes and others coming to you live here. Now, this will be on the YouTube channel, and you will be getting a recording for everyone's here who is here as well as the hundreds of others who are registered. They're not yet shown up. So, a really good registration for the event today. So,
Oh, that's great.
TikTok. That's one thing I know, at least in day trading, dark pools are unknown quantities, and the only way you can suss them out is to see large block trades in the tape. And most people don't know much about tape reading, so I don't bother trying to explain.
That's even that doesn't work. They're literally completely closed off now. You can get small funds managers moving 50,000, or you might get a professional trader moving 1 million share lot or 5 million share lot over the public exchanges. But really, it's pretty much as I'll explain. It's really pretty dark.
Yeah, now it's gotten. Yeah, you're right. It's WordPress. I'm looking forward to hearing it.
Okay.
Well, we're gonna. Yeah, you're one of the good ones. So that's how I only work with the good educators, the people who are actually genuine professionals and are credible and other stuff. So.
Well, I love teaching. That's why I do it in my retirement. It's just a whole lot of fun. I've traveled the world. I just enjoy teaching, so it's fun to do for me.
Yeah, it is. Yeah. I love teaching. It's a lifelong profession. So.
Yes.
All right, traders, we got less than 1 minute. We're 1:59 in the afternoon. And we'll get started shortly. Hello, active traders. This is Ken Calhoun with America's Top Traders. And today, our first trader is Martha Stokes. Martha, who holds a Chartered Market Technician CMT designation, is the co-founder and CEO of TechnoTrader. She's a former buy-side technical analyst. Since 1998, Martha's developed over 40 Technotrader stock and option courses and classes for beginning to advanced investors and traders. She's one of the good people out there. She really knows her stuff. She's a true expert. You guys will learn a lot from her. So Martha, it's great to have you here today.
Hey, thank you very much. Today we're going to learn quite a bit. It's going to be a fire hose. I've written two theses, doctoral professional theses, that expanded the body of knowledge of cycles and relational analysis. So I am an educator. I'm not a guru. So bear that in mind. Market structure has changed in the last 5 years, mostly because of the huge shifts of activity that happened because of the 100-year pandemic. The United States is still the largest financial center in the world. You can add all the other ones together, and the stock market and the 8 other financial markets are just massive compared to everybody else. We really dominate. We're a digital economy now. We're no longer a consumer-based economy, even though economists haven't caught that reality yet. So you need to really focus on being able to make money in the market, because as we move forward, that's where all the money is going to come from. It's not going to come from wages or salaries and so on. Impact of the dark pool activities for financial markets. Alternative trading system venues, also known as dark pools or ATSs of liquidity, have been around now for over 20 years. Did you know that? They came into existence in 2002 when the legislature, the Congress, and Senate decided that people were not able to use fractions, so they were going to change it to decimals. The banks wanted that because they were having some problems. These dark pools, with their peer-to-peer over-the-counter transactions without a market maker limit order book, are intended to eliminate front-running of giant lot orders by HFTs and smaller funds managers. Anybody who has less than $3 billion in assets under management is small fund, and they are not considered professionals, are considered retail. Dark pool activity now constitutes a huge majority of all financial market transactions. I'm not kidding. With over $300 billion changing hands every single day in the stock market alone, not the other financial markets, the magnitude of the dark pool's dominance should not be underestimated. They have somewhere around 145 to 150 trillion T under assets under management worldwide. Massive. I mean, the debt of the US market is like, they could just pay that off in a New York second. This is an area of study that everyone who trades the market needs to learn to understand how the dark pools influence trading and investing activities. There are currently 50 ATS pools offering these hidden venues for the giant or large lot buy-side institutions, and they're swinging 26 million, 20 million. They're quietly accumulating this, and you do not see it on the daily charts. Their activity is delayed to the national clearinghouses until after the market closes. With a level 2 screen, you never see them. You may say HFTs, smaller funds, and so on, but not the dark pools. So you understand the massiveness of this. This is huge, and you can't see it, but you can in the daily charts. Everybody says, well, isn't that unfair? SEC Midas is there. Midas Computer has been around for a long time. They've been studying the dark pools for 20 years. They do not get a better price structure, but what they do is they have a time-weighted at price order system, a bracketed order like we teach in our courses that Howard Johnson created and has had approval from a floor trader, from a market maker years ago, so that market maker still uses it on their floors. This high volatile activity is from HFTs and smaller funds. VWAP orders cause huge volatility, very extremely dangerous. Dark pools hit the penny spread on a millisecond scale. Everybody else on the retail side is trading 1 minute scale. With the ability to trade the penny spread, dark pools can control the price movement up or down with minimal impact on price while they're in accumulation mode. Accumulation means they are quietly accumulating over weeks or months a huge amount of inventory. Rotation also functions similarly. Rotation is different than distribution. Rotation means that they're taking some money out of, like, say, Apple, and they're going to move it into this new smaller company that's on a NASDAQ private market for small private companies who are not yet public. They may be doing that, but they're keeping it in the market. And when they distribute, they're pulling it out of the market. Dark pools tend to use quantitative analysis formulas to determine the price range within which they will buy or sell a stock. They're fundamentalists. They have quantitative analysis. They're going to go, okay, we want to buy this stock between this price and this price. We're not going to pay more. We're going to stop. pro traders start doing nudges and setups to find the dark pools. They can identify them because they see the liquidity draw on the ATS venues. They can begin to see that happening. Then all of a sudden there's a little pop of a run up. This is the nudge. And then all of a sudden it runs up. These are HFTs or smaller funds or retail chasing. So the professional side is all on the millisecond. The retail side is 1 minute. That's a major difference. I call these narrow price ranges of horizontal trends buy zones or sell zones. If the stock moves above or below the range designated, then the dark pool, TWAP, and other bracketed controlled orders halt and pause. This is the way they control their price. This is what I'm going to teach you, how to control your price entry and exits. This creates a pattern that can be identified using relational technical analysis, which includes study of price action, trend behavior, hybrid leading indicators, with an understanding of dark pool activity and pro traders activity. If you understand what they're doing, you'll be able to recognize it on the chart. So I can recognize on the chart where the dark pools are pinging. I also have these great indicators. We have use uptick versus downtick. We have large lot versus small lot. We have volume oscillators. Are any of you using volume oscillators? You're using price oscillators. You don't need price oscillators. Use volume oscillators instead. They ping HFTs. The professional traders will nudge, and then HFTs gap it. So any huge gap at open is HFT. Each market condition has specific locations for the buy or sell zone. Bottoming markets, they make the bottoms. The dark pools are bargain hunters. Fundamentals are above the price. They're going to buy that stock. Trading ranges, they're very careful about because that's a very nasty thing, is when there's no new technology coming forward. Platform markets are all about the giant buy sides because they create this sideways pattern that lasts. You think it's volatility, it's just choppy because they're pinging on a certain price. Moderately trending up or down. On a bull market, it's up. On a bear, it's down. Velocity up or down. Velocity is created by triggers from the professional traders, then HFTs, then smaller funds, then retail, then odd lot investors. Boom, boom, boom. Topping markets are also dark pools start to rotate out of a market saturation phase of a company. Apple is in a market saturation phase, so they were starting to roll out of it. It bends the trend. And so they start the tops, they don't create the tops. The dark pools are bargain hunters during moderately downtrending markets and thus create bottom formations. All of this stuff you need to learn. This is market structure, and you're not learning all of this as you need to. Conversely, they are selling in slow, steady rotation as the stock goes over speculated in price, contributing to the topping formation because the stock is going to correct. Okay? Dark pools are fundamentalists. So when price goes too far beyond the fundamentals, we have a rotation and a commencement. We have a short-term correction, intermediate correction, like we've had in the last couple of weeks. You can see this happening. You can prepare for it. You can know, I've told all my students to say, hey, we're going to have the short-term to intermediate-term correction soon. The dark pools create the hidden liquidity draw professional traders can identify. You follow the pros, you follow the dark pools. We're no longer Wall Street versus Main Street. We have a very special gift coming, and so hang in there. Wall Street versus Main Street has been gone for a very long time. This is the bull market of today. We have huge numbers of various types of retail, high-frequency traders trade on the retail public exchanges, but they are professionals. They are market maker takers, so they're designated. 80% of all the market activity is on the professional side. You only see 20% of all the market activity. If you can't use your charts, hybrid leading indicators, buy-side institution understanding, relational analysis, you are lost and you're losing money. And that's why you're losing money. You get in and say, oh, the market's going down, so I'm going to sell short. But the buy-side institutions have this really cute thing right now where they support the market. They did it in 2022. We never had a bear market. It stayed above that bear market level. Why? Because they were in there buying stocks. They don't like it when ETFs, investors start selling their stocks. ETFs can be short-term traded, but a lot of people buy them for long-term investments. And then as soon as there's a little noise, then they're out selling. The bear cycle is far shorter. The bull market is 10 to 15. We may have a longer bull market because we have 20 new technologies staged to coming out to market year after year after year. AI is just the beginning. Bear cycles are shorter. the buy sides start to bend the topping action. The sell side institutions, professional traders, hedge funds, all those sell short, buy to cover. That's what they were doing last week. They were going, okay, we'll sell short, we'll gap the stock down, sell short. Everybody will panic because they always panic. We know the retail panic. All we have to do is go, recession, recession. And it's like, oh my gosh, they've been talking about recession for 4 years. And then they buy to cover really low and they make huge profits. Well, the buy side institutions got tired of that. And so they came in and they started chopping them off at the kneecaps. And so that all stopped last week. There may be more of it, but the buy side institutions control $145 trillion worldwide. And the sell side banks don't control but a few trillion. Okay, market condition analysis. Who is in control of price? When you look at a stock chart and you look at a pattern, and you should look at a pattern, not just one candle, you should look at patterns. You need to know who's in control of price at that time. What technical patterns are prevalent and reliable? How price will behave at resistance and support? This changes in the market conditions that I'll show you in a minute. What trading styles work best? You all talk about strategies. I want to pull my hair out. A strategy is applied to a style. You can't just use a strategy if you don't know what style you're using. So make sure you understand the styles. There's 9 different trading styles. Which indicators to use? I recommend hybrid leading indicators because they are the most complex and exotic indicators you can have. And they reveal dark pool activity, pro-trader activity far better than the MACD and all the older ones, which are now ancient. That they were written for a different market, for a different era, an entirely different market structure. The inherent risk in trading specific styles at that time, who's controlling price? What trend line patterns are common? It's like, how come nobody ever teaches trend line patterns anywhere? I guess I'm the only one. Which entry and exit signals are most reliable? Reversal and continuation candles are great to learn. It's good to study the candles, but Japanese rice commodities exchange of 1600 is the commodities and currency exchange is nothing to do with our markets today. There are buy entry signals and exit signals. You can get in and out. I have one indicator that is so cool because it signals that pro traders are selling and you can get out the day before the stock runs down. The strength of the price and volume patterns are critical. You have to combine all the data that you need to know. Oops. What market condition tells you is how and when to trade, who is controlling price, what to expect in near-term price action, where to find excellent picks, how to enter, when to exit. Market condition analysis is the market structure is a roadmap on which market participants are actively trading, which are sidelined or waiting, and where we are in the overall long-term, intermediate term, and short-term trends so you know what to do. This provides the relational technical techniques needed to navigate the complex marketplace. It's complex, but once you learn it, it makes sense. And then you go, oh, look at this chart. Oh my gosh, I have a quiet accumulation pattern going on right here. I can start to identify where they're starting to accumulate, and I can estimate their price range of where they're going. And I know that periodically after they've accumulated a little bit, there's going to be pro trader runs. And eventually there's going to be right here. Oh, this is sweet, really sweet. Springboard. Boom, this thing can gap or run up. There's a lot of new candlestick patterns that you have to learn. A lot of the candlestick patterns that are reversals and continuation patterns work or don't work at all. So you have a run up, you have a little signal on this candle from the indicator that it's time to sell before it starts moving down. Dark pool zones and momentum surges. Write this down because on the internet, they're telling you lies. Dark pool buy zones are not a momentum price action. They are not a momentum price action. The dark pool's intent is not to move price, but to strike a penny spread to achieve the desired price within the set range. I was on the floor, Frank Russell's and all their trading floors, and these guys were trying to strike the penny, trying on a millisecond scale with these massive orders, 1 million, 5 million. It's like, and they were all happy when they did that because that's a big deal for them. As the dark pools buy over many weeks and months, they slowly impact the liquidity of that stock, right? Oh, wow. So what's a really good fundamental indicator you should be studying? Percentage of shares held by institutions. That creates a liquidity draw that professional traders can identify with relational technical analysis. I presented this to the CMT years ago, and they're all using it. Then when pros find the liquidity draw, they begin buying the stock for a short-term trade. This causes a nudge. This creates more demand and more volume increases. At this point, the stock is poised for a sudden huge gap or large up day by HFTs. But unless you can see this in the chart and you're waiting for a MACD crossover, are you kidding me? This market moves too fast for that stuff. You're 2 days late. The dark pools cease their automated buy zone orders, waiting for the professional traders, HFTs, then the smaller funds, and finally the retail crowd to start buying the stock, creating the speculative momentums that always follow dark pool buy zone completions. Have we got this? So, dark pool activity is a major contributor to bottoming formations, topping formations, and precedes momentum to velocity run activity. Write it down. Who creates momentum? Who creates momentum? Pro traders, semi-professional retail traders who have been taught by me, hedge funds, people like that. Who creates the velocity or the acceleration or the speculative run, the gambling run? There you're going, well, this is crazy, but let's just ride this baby up. Let's use intraday stops. It's retail day traders, retail investors buying foolishly. And then, of course, the stock will come back down to the fundamental levels and they're going, I lost money on my stock. Well, get with the plan. Professional floor traders can identify the liquidity draw using uptick versus downtick, large lot versus small lot indicators. We have designed these indicators specifically for my students. Why don't I make them public? Because they take some time to learn how to use properly. And because I only want people who are really serious about being great traders and making a lot of money in the market. If you want to gamble, if you want to be the hobby trader of the year, and the IRS isn't going to let you take off any of those expenses or losses, then fine. But if you're serious about becoming a semi-professional, you want to learn to trade as a business with trader tax status, you want to learn how the pros trade. I have traded people who didn't think they would be anything. They started out with no knowledge whatsoever, and they ended up trading, running $100 million hedge fund. Or they went to work for a buy-side institution. Lots of them did. Or they're running a prop desk at a bank. This is all possible. Or they're just staying home. They have this nice, beautiful office. You should see my office. It's just gorgeous. And 3 monitors and the whole 9 yards. You can have 6. And they're looking at all this and they're going, wow, they're making a lot of money. We're not talking $200 a day or $500 a day. We're talking real currency. They also incorporate volume oscillators instead of price oscillators. Professional traders use penny spreads, so their candlestick patterns are very small. What I have called nudges. That's my term. I have springboards. I have pole vaults. I have hurdles. I have rewritten the candlesticks so that when you read that thing and it says springboard, what does that mean? That means that stock is going to move with velocity. What does a hurdle mean? It's going to jump over that downtrend and resume the uptrend. So these candlestick patterns are common in the marketplace nowadays in the modern US stock market. So they're different than the candlesticks that the rice commodities change of 1600 in Japan created. While retail traders and investors are the primary drivers of speculation, mostly gambling and buying at extreme angles of ascent, most people don't teach what is angle of ascent. You need to learn that. It is the patterns that precede these huge vertical runs that matter most, because you have got to be in before the gap. You have got to be in before the big run. Chasing a stock is why you lose money. As a professional technical analyst or retail technical trader, you need to be able to identify dark pool activity before price starts running with momentum and speculation. This requires learning relational technical analysis, the relationship between all the market participants, who's in control of this, what styles you should use, where we're going with this. Market condition analysis, which I write every morning. I write my students a long market open report and a market analysis report, so they know how to trade every single day. I give them 2 charts every day to study. Employing hybrid leading indicators with spatial pattern recognition skills. None of you have this yet. Spatial pattern recognition skills. Trading is a skill to your candlestick chart. So you can go, oh, wow, I want to buy that stock. It's like, oh, sweet. Okay. So I have 3 little charts left here before my time is out. A I would like you to visit our website at www.technotrader.courses. We have a whole lot of mini courses to give you the feelings. This is the most professional, popular, this professional trading plan. Howard Johnson created the trading plan management, and it's just awesome. I looked at it and said, we don't need this just for our trading floor. We need this for our students. Our students need this. And he says, really? He says, well, yes, you set the whole month aside. You know what price range you have, how many trades you have to put on, how much money you have to make. It makes trading so simple. The leading candlestick patterns talks about the candles that I teach. Swing trading is completely different how I teach it. So you want to be checked. We also have our 3 courses that are all the methodologies. We have one for brand new beginners that need to know everything. And this just shows you the outline. This, yes, I want it as an outline. Premier is for those of you who have at least 2 years of experience to maybe 5 or 8 years of experience. Elite is for those of you who are already professionals and are coming to me because you need the training that you can't get anywhere else. There is nowhere else on the planet to get it. So everybody comes to me, CMTs come to me, everybody comes to me. And these are the only course that teaches you everything that professionals know. Starting with market structure and trade execution. How do you put on a trade? How do you have a controlled bracketed order like the one Howard designed? A complete comprehensive methodology for developing professional skills using professional tools and techniques, including hybrid leading indicators and MCA scans. Outstanding support from our professional staff. We are here. We're supposed to be closed on weekends, but none of our support staff can ever get away without having. We have communities, we have discussion groups, we have the most amazing 2 years to build this amazing student website, and it's my dream come true. It is so fun, it's so exciting, and I just love every aspect of it. So we also have a special for you. You have to register within about an hour to receive this extremely valuable educational report. It costs $995 or $1,000. I sell this to professionals all the time. They are very interested. I'm gifting this to you if you decide to register for it. You can use this little with your phone, and here's the HTTPS/ maybe you can put that in the box for them. And they have that, so they can click on that. That will give them the promo code so they can get it for free. You can you will go to a website. It will open up. It will give you the market structure report. You can read this market structure. What's important? This report is a professional report. It is not available anywhere but through me. I wrote this report. I update it all the time. I just updated it. It has information in here that you can't get on the internet anywhere else at all. Not at all. It gives you information about, what lot sizes they use, how they route, the speed of execution, what they're looking for, all this information. You're like, it's like going into space and landing on a whole new planet. It's that different. My students who take the course, the Premier or the Elite, it comes with that course, and they love it. They are so excited after they get this. Like, Martha, I had no idea. This is so interesting. Wow. I didn't know the market was like this. Are you kidding me? This is how it works. I say, yeah, this is how it works. But I want people who are serious, who really want to become better traders, who people are really, if you want to just play around and have a good time and chat and be in a hobby group and lose most of your money and make a little money and then and that type of thing. It's like going the boys club, they go out for a cup of coffee or they go out to a bar and they sit and chat. That's fine. There's nothing wrong with that. But if you're serious about making real money, you want to become a semi-professional, you want to become a professional trader, you want to be able to trade as a business. We have the trading entrepreneur course coming out in September. It is everything I know about how this. I'm an expert on this because I have had 3 subchapter S's. A subchapter S allows you to have that trading as a business. It also, I can tell you everything in and out because trading as a business is a completely different kind of small business than anything else you can imagine. Most small businesses either make a product or resell a product, or they have a service or they resell the service. Trading as a business has no service. It doesn't sell products. It trades the market. So it's entirely, completely unique. If you really want to get this down, you need to come to me for it, because your CPA or your attorney is clueless. They work with small businesses that sell products or services. They don't know anything about trading as a business. And we're going to go through every single aspect, every applications, bylaws, how you set it up, how you make it easy. Because right now, everybody is working so hard. At the end of the year, if you're day trading or swing trading a lot, what do you have to do? On your income tax, you have to document every capital gain, short-term action that you did, like it's a capital gain. Document what it was, whether you lost money or not. If you lose for the year, you can't write it off. You can't write off your computer. You can't write off your education. You can write off education if you're trading as a business. You can't write off anything but very basic summary things. So you don't get any of the advantages. Professionals like myself I've been trading as a business since it first came out in the mid-90s. And it's like, oh, yes. And because everything changed, we went online and everything changed. And so I have this depth of knowledge that I'm going to share with my students. I've been putting this off for a while, but I think, yeah, there's so many people that need that out right now. Trading as a business, because we are a digital economy. We're no longer a consumer-based economy. Our pyramid is inverting. We're not going to have any opportunity whatsoever to change this. So more and more people are going to have to rely on our financial markets, because that's where all the money is. And if you keep losing money, you're never going to be, you're going to lose your middle class status. You know, a lot of you close to retirement. Is Social Security going to be around for you? Is your retirement going to be enough? Trading as a business, it doesn't have to be day trading. It doesn't have to be day trading. Swing, velocity, platform, all those are possible. So I'll take a couple of questions because I have about 3 minutes.
I'm sorry, Martha, you had a really good point about angle of ascent. I use something called acceleration ramp, where you look at the slope of the line of the price action to see if it gradually goes and then starts to angle up. If you can talk briefly about angle of ascent, because you're exactly right. It's very important to see emerging price action to the upside.
Okay, you always have to remember that the stock market, as weird as it is, also follows the laws of physics. If a rocket goes up in the air, it will only accelerate to a certain point. So long as there is pressure pushing or power pushing it upward, it will continue upward. But as soon as the power or the acceleration declines, it's going to start falling down. The same thing is true of stocks. If there's volume going up and up and up and up and up, it's going to continue up. But as soon as we begin to see the deterioration with TSV, volume oscillators, and other oscillators, we start to see that tipping with the TSV before we even see it in volume bars. Because remember, volume bars is the full volume of the day, and it starts to bend. And so it's like, get out now, get out now, sell and be done. Yeah,
absolutely. Wonderful. I want to say thanks for a wonderful presentation. It's very professional. You really know your stuff. I learned a lot too. It's the bane of traders is they don't leave soon enough. They don't exit soon enough. So it's I'm sure your training looks absolutely professional and highly recommend. So thanks, Martha Stokes, for being here. I really appreciate it. Yeah.
Okay, great.
Great. So, hey, you too. Thanks for being here. Bye-bye. Well, next up we have Anka Metcalf from Trade Out Loud. Anka, are you with us?
Hi, Ken. Hi, everybody. Hi, Martha. I really enjoyed your presentation. Love it.
Thank you.
She has been around forever and she has really amazing stuff. So guys, oh my gosh, was such a treat. Hey, Ken, thank you so much.
Hey, sure thing. Yeah. Martha's really smart. Well, you guys are all smart. You're all really good experts. So it's an honor to be here with you folks. I appreciate you for being here and appreciate all of our audience for watching and listening. Really good people here. Unlike some multi-speaker events, I get real, genuine professionals. So let me turn it over to you, Anka Metcalf. How do I change?
For some reason, I cannot start the video. It says here that I cannot start the video because the host has stopped it. I don't know.
Okay, I made you a co-host. Hopefully now you can take control.
Oh, okay.
That's the only way I know. Technology, right?
I know.
So let's see. Can you, there you are, or that you were
Oh, let me
briefly.
see.
Okay,
Oh,
there.
yay.
Hey, hey, how's it going?
Okay, let me see.
Now you can share your screen. Yeah, there you go.
Okay, perfect.
All
Okay,
right,
I'm
well,
trying to get, okay, here we go.
let me go ahead and
All right.
introduce you. Let me introduce you. So hello,
Thank you.
active traders. Anka Metcalf is a professional trader with 20 plus years of trading experience in stocks and futures. She's been over a decade working in investment banking prior to becoming a full-time trader. Her site is Trade Out Loud. And now that I've read that, I just want to say thanks. You're really good at what you do, and I really value your presentations. You have really good tips and strategies. So I look forward to hearing you, and take it away.
All right. Well, thank you so much. All right. So hello, everybody. First of all, I want to thank you, Ken, for inviting me here. Your panel of traders is out of the ordinary, extraordinary. And I just want to, I feel humbled for being part of this event. So thank you so much. Today, I will be talking about something that is very dynamic, very, very intense. I will be talking about day trading, and this is how I generate income. I'm going to share some important information with you guys today. And at this point in time, we are hosting an open house. And if you guys are interested in our open house, we still have 2 days left of live trading with me. I'm going to be sharing the results from today's trading environment and from today's trading in general. And you'll hear about that soon enough. So how about this, guys? Work less, live more, and grow richer, right? So if it's sounds too good to be true, sometimes it is too good to be true if you don't have the background and if you don't have the trading education. But this is the time to learn how to trade. You could see here that everything is so inflated. Real estate is over the top. So where else can you start investing? Well, start by investing in yourself so you can get the best return on your investment, meaning profits from the market. Supercharge your trading portfolio, trading 1 hour per day. Literally, I trade the power hour. It wasn't always the case. I have been actively trading for about 23 years, and that is day trading for 23 years. I have been on the investing side and swing trading side for much longer than that. So let's get started, everybody. My name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized on educating individuals how to day trade, swing trade, and invest into any market, whether it's the futures market, stock market, a crypto market, any kind of market. If it has a pulse and if it's chartable, you can trade it. I come with 20 plus years in day trading, swing trading, and investing, my own accounts. And I also come with 10 plus years in investment banking because I told you that I have been on the investing side. I run two programs. The first program that was initiated when Trade Out Loud came about is the Stock Swing Trader program. This is the oldest program that we have from 2010, and it is, you guessed it, for swing traders, for active swing traders. If you want to generate cash flow, if you want to have your money working for you, that is the program you want to be in. We have members since the inception of the program since 2010. So this is really rewarding for us because we have people and traders that are trusting us with their money. And I do run the stocks. I do run the futures trading room. This is the newest edition. It was adopted by me, created in 2017. And it came actually couple of years after I started teaching the day trading power course. And I never planned on sharing what I do for a living and my trading, but here it is. So everybody kept on asking me, so how do you generate your income? How long do you trade? It wasn't always the case because I started my day trading career in trading stocks, and then I navigated towards trading futures. I had a lot of help, and basically my CPA, my accountant, advised me that I should shift a little bit more towards futures trading because it's a little better on the taxes. You do your due diligence on that. I specialize in high velocity trades. So that means is that I look for several inflection points on the technical chart that would create that velocity move for the upside or for the downside, depending on the strong trend. All right, so if you guys want to hear more about what we do at Trade Out Loud, you can head on to our website, which is tradeoutloud.com. So are you guys worried about inflation? Oh, I am a little bit, but I'm not that much worried. And why? Because I have my money working for me. So not only that, I have my long-term money working for me, I have my swing trading money working for me. And what a great opportunity, because I have added to the swing positions and to the core positions, and especially to the long-term positions. Once we got into the averages, into the 200 SMA, so I've added a lot of NVIDIA. VOO is one of my favorite for long-term investing. That is an ETF. Broadcom, these are my favorite. Apple, Microsoft, you guessed it, pretty much the tech stocks. So if you're worried about inflation, and you shouldn't be if you're day trading, because you could actually counter that by generating more income. And that is my goal, to generate more income. And I'm going to share with you my stats today from my brokerage account. So my goal for you is to understand the process and how I look at the market. So how did I get started? Because I always get this questions like, hey, how did you get started day trading? How did you give up your career? Because I was working in a financial field. I was working in investing. I was working in the hedge fund field. So how did you all do it? And, just trading on your own? Well, I saw how things work. I started educating myself. So I invested in my education before I gave up my job. And I took actually 3 courses, and I have to say, they were pricey, very, very pricey. But hey, I had to do what I do, and to do what I needed to do in order to have confidence into my day trading. So I quit my job. I took out my long-term and my short-term savings. I had 6 months of emergency fund. I started day trading in 2003. And I started making money after just 3 short months. I never blew up an account because I understood the power of R, the risk to reward ratio. I started generating income after literally, and I'm not exaggerating, 6 months into the process. And I was, one of the very fortunate ones, because I understood what it took to be very disciplined in trading. And I grew my account, increased my R size. So I haven't always, traded with a lot of size. So you start small and you gradually increase your size based on your account size, right? And you generate your R based on your account size. So I opened back my investing account, and in 2009, I could definitely say that I bought $20,000 worth of 20,000, not even, I wish, okay. 20,000 shares in Series Satellite, and I sold it in 2018. So I bought it at 15 cents. I sold it at $7.16. This is my biggest story right here. And automatically, poof, I became a millionaire from my trading activity, not my day trading activity. But my day trading activity helped me create the income to buy and to therefore to purchase those Series Satellite stock. And I started to contribute to my stock and swing trading account. So definitely financial free since 2009. And once you have more money in your account, you feel a little bit better about your trading because you have that cushion. So income trading for me is instant gratification. Trade your way to financial freedom and trade your way to wealth. So a lot of times I get asked, is trading risky? It's like, oh my gosh, and I have a lot of friends or acquaintances that said, oh my God, what are you doing? You're sitting at home and what are you doing? Like, you're trading the market, but isn't it risky? Like, aren't you going to lose all your money? And it's like, you could see them like when the market is diving and they go like, oh, but the market was down. They have no concept that the market you could actually make more money as the market is going down than the market is going up. But anyways, so I'm going to ask you, I understand trading is risky. Is it really? If you really have a allocated risk amount, it's really not that risky. And we're going to get right deep into that. But here's the thing. Walking down the street is risky, right? Drinking a glass of water is risky. What if you choke, right? Swimming is risky. What if you drown? I mean, there's a risk in every single thing that you do out there. But once you take a calculator approach, so basically you actually have a calculator approach to trading, right? So I understood this right from the get-go. And actually, these were my first trading sessions. I didn't learn about candlesticks first. I didn't learn about patterns first. I didn't learn about anything first. First, I needed to learn, and I've learned, and I was very fortunate to have phenomenal mentors. I was taught how to risk into trading first and foremost before talking about any kind of strategy, because I could give you the most terrific strategy right now, but if you don't apply the risk, the proper risk or reward ratio, you're going to blow it and it's not going to work for you. So determining your risk and your risk tolerance is one of the most important things. And risk is correlated to your account size. You could have a small account size, you could have a big account size, you could have a gigantic account size. You're going to trade it absolutely the same. So the amount that you have in your account size does not matter. But what matters is what percentage of your account are you going to risk? Traders in general should not be risking more than 1 to 2%. And here I'm coming with a little addition to what the general norm is. I risk 1% on day trading because day trading is a little bit more volatile and a little bit more on the riskier side in the sense of stop outs. And you could have more stop outs in day trading than you definitely have in swing trading, or in investing, you don't use stops. In stock trading, I use 3 to 4% or even 5%. I'm really well versed, and I'm really taking a lot of risk into that because it depends on your risk tolerance, and I actually contribute a lot on a weekly basis or on a monthly basis to my long-term positions. Now that we have a set risk amount per trade, we have to determine how many trades we are going to take on a certain day. Because if you're a day trader, you should allow yourself at least 3 to 4 trades or 5 trades in a day. So that means that you're going to be risking from 3 to 5% in a day. And you can see that there are a lot of traders out there, and especially in the futures market. And I think this is a big mistake what brokers are doing, because they're encouraging traders to open up accounts with really small amounts. Like there's one trader out there that allows, traders to open an account with $500. Now, how can you make a living with $500? I mean, just think about it. It is literally impossible. So another very important element is deciding, again, how many trades and how you are going to play that day. Because, for example, if you have 3 losing trades consecutively in a row, then stop trading. You have maxed out your your allowance, and therefore you're done for the day. However, if you have, for example, a winning trade, and then if you have a losing trade, you can go on and as you continue. Typically, I do it a little bit differently. So for example, if I have one losing trade, and if I start the day with one losing trade, I'm a little bit more cautious. But yes, I risk the whole risk amount, because you need to maintain that risk amount be the same. Otherwise, your results are going to fluctuate a lot, and your P&L is going to be all across the board. So it's not healthy for your portfolio. So risk the same size. A lot of traders, what they do is if they have one loss, the second time when they take the trade, they double because they want to make the money back fast. And this is where they go wrong. I keep the same size account, and I was taught to keep the same size account. And if you're talking to any, Wall Street, let's say hedge fund out there, they're pretty much doing the same thing that I'm doing. So here's an example of a 15-minute setup. This is the 15-minute sell setup, and this is the type of trades that I take. So for example, here you can see that the 15-minute is downtrending. I'm using very few moving averages and very few indicators because I'm a true believer in price action, but I'm using the 50, I'm using the 20 simple moving average, and I'm using the 10 exponential moving average. If you don't want to use the 10 exponential moving average, you can use the 8 simple moving average, which is really quite in line with the 10 exponential moving average. And I use, of course, the 200 simple moving average. Now, here's the trade. So for example, in this trade, I have a little doji decision here. And I have it just below the trend, the massive 10 exponential moving average, and it's actually producing a sell setup. My short actually began a little bit later because I wanted to get in with confirmation. So this is my entry for the short below. This became my stop. This was my target 1 level into the prior low, and the next target came here from a confluence support level here that was marked on my technical chart way below that. So you can see here that this was my risk, very small risk, and my reward was literally about 6 hours into this trade right here. So you want to start trading, but you don't know where to start. Well, I can provide you the GPS. Okay. Oh, by the way, this is me trading in my floating office right here. And that was yesterday. And this is one thing that we specialize in. And when I meant instant gratification, I really mean it. So for traders that are in my trading room, I advise them, like, if they have never traded before, you know, to watch me for a few days. And if they don't really have a lot of experience and they don't have like a track record for their trading, to just take my trades and then take their separate trades into a simulated account until they try to mimic what I do in the trading room. Like I said, I come with a very vast trading experience from day trading, swing trading, and investing. So I know that everything out there is for educational purpose only, but this is how they can trade it in a paper account, for example. It has been a tradition of ours to trade the CPI numbers and the PPI numbers. And because today was one of those days, this is our last one that we traded like a month ago. And you can see here that we had a plethora of ideas. We had YMSMP, NASDAQ, Russell right here. And I have the numbers right here. And we had like literally instant gratification. Look what a the magnitude of the move. And not only that, but we traded it before the market even opened. We were done in the first 5-minute workday, and then we started it again. So this is where we legged in again into the trading room for those traders that were not here for the open. This is another work day. This is another 5-minute work day. Here it is. This is another one. This is a different month. And if you are curious, like, hey, did you trade today the PPI numbers? The answer is yes. And yes, we traded it. And in fact, we did call it. This is from my trading room. It was posted around 8:20 a.m. Eastern. And you could see here, this was because I've opened the trading room a little bit earlier. We had the open house that started at 9, and this was for Trade Out Loud members only that understand the concept and really understand what we're talking about and how we place our stops and how we manage and so on and so forth. So it was a little bit intimidating to share this with the open house, but open house was open. So if you logged in the open house, they could actually see what we were doing. So I don't do any kind of mic when we do the CPI numbers or the PPI numbers, as I need to really concentrate on my trading because my number one objective is to make money for myself. And I share what I do with everybody that is in my room. But my number one objective is to make money. And this is the number that I called. You could see it right here. 18,767. This is our entry right here. And I said that it's going to go to 800, 820. And if it gains velocity into the 820, it's going to spit out into the 850. So we targeted the 820. Now this is literally in 1 minute. And again, you have to be very proficient and very fast. You got to really know how to handle your platform. You have to be well versed before you actually do this. You have to try it several times in a simulated environment before you actually do this. Don't forget that I come with 20 plus years of trading experience. So for me, it was 52 points in 1 minute. And typically for those of you guys that are new and don't know what a futures contract is, 52 points in NASDAQ is over $1,000. And this is my trading for today. So my win ratio today was 71%. These are all the trades from my broker that I took. So I took NASDAQ. You could see it right here, the 767. It's a buy limit order. So I got filled exactly where where I wanted to. You could see where my exit is right here. So you know your entries, you know your exits. So I'm putting my money where my mouth is. Okay, so not a lot of traders do that because not a lot of traders show this, right? And these were all my trades. So you can see here that I had some losses. You can see that account, the size that fluctuates here, and it's normal because I'm using position sizing. If you don't use position sizing, you would have had a red day. If you're using position sizing, you had a green day. And therefore, my returns for today are $10,000, $490. Win ratio is 71%. So if you guys are interested in joining the open house, this is the link right here. So if you want to go in there, it's tradeoutloud.com/sign in. This is where you go. And I think Ken has it ready towards the end of the presentation. We still have about 10 minutes left. So I'm here to talk to you also about some of the most important things about trading that are not really discussed that much. And that is confidence. Confidence in trading comes from experience and comes from education. Conviction as well comes from knowing the market environment, knowing the market context, which is the most important thing, knowing the reaction that the economic releases are going to have into price. And not even that, but here's the thing. Do I care what the CPI numbers are as a day trader? No. Do I interpret them and say, oh, if they're going to be above or they're going to be below, I'm going to do this or that? No, absolutely not. So what I do is I look at the technical chart, could care less what the numbers are at the time that they're being released, because I have my full parameters and I know that if they're going to get triggered at a certain point to the upside, they're going to start moving higher, or if they're going to get the fluctuation to the downside, they're going to start moving lower. Knowing your levels matters. You got to have a lot of patience. For what? You need a lot of patience for a setup to form. If you don't have a setup, then guess what? You're not going to have a trade. No setup, no trade. Is that easy. You need mental toughness because, for example, a trading day like today, even though it grinded higher, it was consuming because, for example, from 9:45 until 10:45, we had literally a base. So the things were not moving. They were chopping around. They were floating. They were levitating into the highs, but they were just up there. They were not moving higher. So therefore, you need a lot of discipline to wait until the environment is right to take the risk on and to enter the trade. And of course, you need education, like 100 exclamation marks. If you don't have the trading education, you cannot succeed in anything. I mean, literally, if you want to perform any kind of job out there, you need some kind of a skill. And trust me, the market is going to teach you, but it's going to teach you how to lose money. Okay. So, and preparation. So preparation is very important. Prepare for the market before it opens and not, the market opens, you go like, oh my God, what am I going to do now? Okay. So if you want to succeed in trading, you need to have that burning desire. Like I said, I quit my job. I had my emergency fund and everything, but I needed to succeed. I wanted to succeed. I love the market. I love it. I can't, even when I go on vacation, I still have my trading room with me because we only trade the power hour and I love it. I do it because I love it. So you have to be in the market for the right reasons. And when you understand the market and when the market is going to start rewarding you, you're going to love it even more. And again, education, because you need to have the foundation, and from that you can compound on your skill. Discipline to follow your plan, patience to wait for the right opportunity into the market and for the right setup. You need to focus, no distractions, like no phones, no nothing. Okay, so nothing around you, and conviction, and of course perseverance, because it takes every single day is different. One day you lose money and you feel like so bad, and the next day you make money and you're on the top of the world. So what I trade, we still have about 7 minutes left. I trade mostly the futures indices for day trading purposes. And I trade the rest of the panel right here, mostly for swing trading. I focus more on swing trading. For example, we have a swing trade in bonds, that in ZB in bonds, or TLT if you don't want to trade futures. We had a gorgeous rotation onto the daily. So we are into bonds for a swing trade this week. And of course, these are my go-to. Trading is a rule-based system, and it's going to slap you once you don't respect the rules. And it's all about finding high-odds trades and having the patience to wait for that. It's fine and precise execution, so you need to know how to execute. It's your duty to do it on your platform. And if you have any questions, that's where the brokers are for. You can ask them, but you need a lot of in, out, placing trails, placing entries, the limit orders, market orders, whatever it is. And of course, having the right mindset. So I'm trading the power hour. So a lot of you guys are here. I'm like, what is power hour? Okay. So in day trading, the term of power hour refers to a specific period in the day. And for futures trading is from about 9:30 to about 10:30. But sometimes if you're getting like a lag movement at the beginning, it may last into 11 o'clock or 11:15. So it's basically within that core. And that is where the volume is at. There is the volatility where it's at. And that is a good thing because you get a lot of action. So why futures for me? I made the switch about 10 years ago to full-time day trading futures, full-time meaning like 1 hour, the power hour. And you have great advantages from the accounting standpoint. You have reliable volume. You don't have manipulation. One thing that I like the most is the 24-hour trading. You have hands-on risk. So that means that, for example, I'm in bonds, right? So if bonds are gonna make a crazy move, for example, for to the upside, you know, I'm gonna be able to raise my stop before they actually start sloping down and whatever, you know. So if I reach my target one, I can be there to actually take profits at target one. So there are a lot of advantages, and you don't need a lot of indicators, you don't need scanners, you don't need anything of that sort. So futures, basically to open a futures account is not hard, and you don't need a lot of money, but you're not going to make a lot of money with little money in trading futures. It's not like your 2015 market. Back then, yeah, you could make money, you know, like 10 years ago, you could have a $5,000 account. You can make $500 to $700 a day average, no problem. Now you have wider stops, volatility is so much wider. So you're not going to be able to position size that well if you have a small account. But hear me out. There are so many options out there. There are prop accounts that you can open and give you access to, you know, a lot of capital, and do your due diligence. Like I said, lots of opportunities out there. So I'm going to show you an example for the Qs here and why I trade futures. So in the Qs, for example, the buying power here that you can see on the down right side is about $15,000 for 100 shares. We did this example in a coaching session. So I showed traders what you know, a certain buying power can generate. So in here, for example, it generated. So I'm not going to talk about the strategy. This is a little bit irrelevant, but this is a rotation that happened into a key timing into the market. So basically here you generate about $300 in NASDAQ with the same buying power in effect and the same risk, $2,400. So I made my point. We're going to go very quickly through these SPYs as well. You're going to see in the SPYs $262 with the same buying power, and in the futures S&P 3,600 with the same buying power. So the market is literally the futures market, you know, there are a lot of advantages into the futures market. And when there are especially geopolitical, you know, divergence that pop up into the market. Right now we're into that kind of environment. The market is not going to wait for the market to open in the New York trading session hours. It's just going to, you know, trade, and you can take advantage of that. So I'm going to give you a quick, before I sign out here, I'm going to give you a quick trading plan focus on what you need to do and what I do. So this is what I do. So when the market opens, I'm very focused on the open. There could be a potential move within the next 5 minutes from the open. That is what I'm targeting. And if that is not going to happen, if it's gyrating and if it's just zigzagging around, then I'm not going to do that. So I wait for 10 o'clock. 10 o'clock is actually reversal time. And then we have the 10:30. And if we're not getting any action at between 9:30 and 10 o'clock, we're going to get action at 10:30. So that is the last timing that I'm going to be acting on. Time frames, I focus on the 2, 5, and 15-minute time frames. I focus on the buy pattern, sell patterns, and breakouts and breakdowns. These are the most common. Of course, we do have about 10 strategies that we deploy into the trading room, depending on the market environment. And my execution times, like I said, the first execution time comes at 9:35. The second one at 9:45, the third one at 10 o'clock, and the latest one at 10:30. And in fact, you could see today, because I showed you my stats from my broker, we actually made money on that. Okay, so I'm wrapped up all right here. I just want to make sure that I invite you guys to the open house. We have an open house. Go tradeoutloud.com and sign in. Thanks so much, Ken.
Well, thanks, Anka. Really good. Two things that you brought up that are really, really important. I've had the difference between profitable and not profitable days, weeks, months, and years is position sizing. You know, every trade should be seen as you break it into pieces. That makes it. And Tom Sosnoff says trade small, trade often. So you also highlighted that. Really important. And also the 10 o'clock reversal. It's like clockwork. Most people don't know 10 o'clock reversal. So you had so many great tips. Thank you so much for sharing. You're really smart. I think you learned so much. If only we could get traders to listen and do, right? That'd be,
I
that's
know.
the, if only they would listen. We tell them this stuff. But yeah, you got lots of good training. So folks, I highly recommend all my speakers. Thanks, Anka. Really good presentation. Good job.
Thank
Well
you,
done.
Ken. Thanks for having me. Thanks so
Thanks so
much.
much. Yeah, good job. Good job. Appreciate it. Well, next up, we've got Norm Hallett. Norm's been a longtime friend from many, many years ago. Mr. Norm, let me make you a co-host and you should be able to take over and I will introduce you right now. Hey, Norm, are you there?
Yes, I am. Can you hear me okay?
Yeah, sure thing. So let me introduce you. Hey, traders, welcome. Norman Hallett is the co-founder and CEO of Subconscious Trading Corp. He developed state-of-the-art mental training for the trading community after having spent time with Payne Weber as a stockbroker. So he's the real deal. Norm's he's developed numerous successful startup companies and programs. He's at thedisciplinedtrader.com. Norm's one of the good people. He's good medicine for traders. He really is. I've known Norm for forever. So Norm, how you been?
Too long. I've been good. I just listened to the end of Anka's presentation. What I got out of it was that the market was levitating. I haven't heard that. The market today was levitating. I have to look
That
back.
it was.
Get it to this chart.
Yeah, the gap continuation. Yeah, really good speakers today. So yeah, well, Norm, you're one of the good guys too. So welcome aboard and take it away.
Thank you, sir. And I see Steve on the bottom of the totem pole here. So if you don't know anything about candlesticks, Steve is your guy. In any event, I wanted to talk today about Their Money, Your Profit. It's a new site I'm putting together, and it concentrates on the pros and cons of prop trading. That's what today's talk is about. Prop trading, when I first saw it, I thought it's got to be a dream. Nobody's going to pay you 90% of the profit that you generate trading their money. I mean, why would they do that? And the reason is because there are plenty of fees. A few fees, they're actually very, very small. Right now, even to test for a $250,000 account costs you about $60 a month as you test. I'm going to go through some of those fees. I'm going to use it as a basis of a $50,000 funded account, which I want to emphasize. I want to give you a little bit about my background in travel so that you have a good reason to maybe pay attention to what I'm saying about this. But know that futures trading is risky, can result in substantial loss. Only risk capital should be considered. And further, past performance is not indicative of future results. I think you know all those things. You're here because you see an opportunity in speculation. This is with your speculative money. So let's get going. We do have, this is an hour presentation that I am squeezing into a half hour. And if I don't know if I can talk as fast as Anka did, but I will try. Certificates, they wire it straight into your account. I just wanted to show you that I've had some success with it. Loaded gun simple trading plan. You get the core loaded gun trading plan. I showed you a piece of one trigger. I can show you a couple more that we have in the, again, frequent reliable triggers. These videos are very short. You can see that I keep my trading plan very simple. Again, that room of traders that I had taught me, you don't want to be dealing with lots of crap on your chart. Videos, you can get through all of these videos in about 2 hours, not even an hour and a half. And then I have nuances. These are some of the things, these optional things that you can do with your trading plan so that you can adjust it to who you are. Rather than you trying to change your mental state to who you are, why not change your trading plan to adjust to who you are? So if you're not a person with a lot of patience, you shouldn't have a trading plan that makes you wait and wait and wait and wait and wait. You need a trading plan that gives you the action, so far and so on and so forth. So there are 7 of these nuances. I've made up the concept of nuances, and I think my people really enjoy it. I know you will too. We meet every last Wednesday of the month. Every last Wednesday of the month, we all get together, and that's where we share some of our excitement, some of sometimes I'm lecturing, it winds up, sometimes I'm answering questions, whatever it is, we're there for updates, I share experiences and so on. So I'm also including one-on-one coaching for 90 days. And this 90 days doesn't start when you start looking at the videos. It starts with our first session. So look at the videos, learn the system, look at some of the recordings of our past get-togethers, get an idea of how the simple trading plan works, and then meet with me. That's when the 90-day clock starts. So as soon as you invest in a loaded gun, you're going to get an email with my calendar link. and we'll have a personalized one-on-one walkthrough with me. I'll learn more about how your background is and advise you on how to get a quick start with your new purchase. This is very important. You need accountability. You need to work with me one-on-one. So 90 days, you can have as many sessions as you want with me. Okay. All right. The fact that then you've had my back has made all the difference in the world. We don't have much time, so I've got plenty of testimonials on the site. You'll see that. Here's somebody that passed after 4 days, $100,000, and then he made another $6,000. This is one of my real superstars, Sandra. She's really galloping. Here's somebody that has 5 accounts. He's a very aggressive guy. He's got 10 and he made 21,000 in a week. And you know, I really don't suggest being this aggressive, but Ken is an aggressive guy. My second bonus is that sometimes it can be tedious to set all of this up. In other words, set up your trading, set up your trading, not your trading plan, but your Ninja Trader, and bring in the data feed. We'll do all that for you. I've got a guy that'll jump into your computer. I'm including that. So all you got to do is sign up. We'll set it all up for you, and then we're ready to go. And then you'll be ready to start trading. Okay. So here's my anniversary special. Loaded Gun Simple Trading Plan, all the nuances, the monthly get-togethers, the one-on-one unlimited coaching, and the hands-on setup for you. But I also have a guarantee. So I'm so confident that you're following the Loaded Gun Simple Trading Plan will result in you getting funded by your prop firm so that you risk their money and not yours, and then receive 90% of the profit you generate. Just share your trading experience with me, that you followed the simple rules and it didn't work for you, and I will refund your money and I'll give you $500. I've never had to do this. The trading plan works, and I think I know you're really going to enjoy it. This will be your last stop in purchasing trading plans. I am confident. So here is my offer. Loaded Gun Simple Trading Plan, core, nuances, and the monthly meetings. I'm going to give you the one-on-one. Remember, this coaching starts tonight. So if you're taking a vacation in August, don't worry about it. This 90 days starts when we have our first meeting. I'm going to set it all up for you if you're not already set up. It's got a total value of $5,200. I promised Ken that I would do something. It's my anniversary, so I'm naming it for my anniversary, but $1,247. But for this $997, all you have to do is go to theirmoneyyourprofit.com, the coupon code August13, theirmoneyyourprofit.com, coupon code August 13th. I can take, well, it says 10 traders. That's not true. 5 traders, because I took 5 in a Saturday. I can only take 10 traders, and that is my, how did I do for speed there, Ken?
Hey, right on target. And thanks, Norm. Really good presentation. I know you've trained thousands of people, so it's good to have you here. And thanks so much for being here. It's good to see you, man. It's been a while.
I appreciate that. That's a pretty easy URL to remember, theirmoneyyourprofit.com. So make sure you put that August 13. And again, I appreciate the opportunity. Always great to be. And Ken, you were on like a sabbatical for a while. I missed you. So it's great to have you back.
I was in Vegas having fun. So anyway, back to it. Somebody's got to do it. A lakefront property with a woman I met on Match.com. But anyway, let me bring us to so thanks, Norm. Good to have you, man. And you're always welcome back.
Thank you.
Next up, we have Harry Boxer, the #1 stock picker I've ever met in my life. He's a rock star. Harry, you there?
I am. Can you hear me?
Yeah, sure can. Can you take over? Let's see.
How do we do that? Share screen?
Yeah, share screen.
Okay. Let's see. Where am I? Okay. Should see one of my charts.
Yeah, there you go. Yeah, that looks great. Hey. Well, Harry, it's good to have you here. Hey, folks, let me just introduce, for those of you who haven't heard, Harry is the founder of the techtrader.com. He's got more than 40 years of Wall Street experience, technical analysis, including 8 years on Wall Street as a chief tech analyst with 3 brokerage firms. The main thing is Harry Boxer is a rock star. He's the #1 stock picker I've seen in my whole life. He's amazing. His charts are rock stars. He really does a great job. My favorite technical breakout trader in the world. Harry, it's great to see you again, man. Take it away. Good to see you here, man.
Pleasure to be here. Ken, can you see my website screen? I just reshared it.
Yeah, looks good.
Okay, great. Folks, I'm Harry Boxer, the technical trader. Been doing this longer than anybody that you'll hear today, believe it or not.
He has. And you're better than anyone, too. He's honestly, I tell you, I ask you not, folks. Harry Boxer is the #1 stock picker in the world. His charts are legendary. He's really, really good.
Well, thank you. I've been actually trading with my site since 2001, right after the dot-com crash. I've been told that I'm one of the first sites or trading rooms on the internet ever. But I've been doing it for quite a while. Over 50 years of total trading experience, including 10 years on Wall Street as a technical analyst for 3 different firms. I wrote a book called Profitable Day in Swing Trading for day and swing traders. And basically, I'm a believer in technical analysis to the nth degree. I believe that the only problem with it is that there's human beings involved that do not know how to interpret it properly. So back in 2001, when I saw that it was so risky to keep money overnight, I decided to day trade using intraday 1-minute chart patterns. And I'll show them today. But what I want to get started with, folks, is I want you to understand what the three proper components, I should say, of trading are every day. Number one, preparation. You know what that means? The early bird gets the worm. In my room, I'm on my site, because I live in the LA area, at 3:45 in the morning. That's right, 6:45 Eastern. And I'm online and I'm looking at hundreds of charts and lots of news and seeing what stocks are popping. I go to a lot of pre-market lists that come on various different sites. There's one service in particular I use called the stockmarketwatch.com. They give you really good lists. Let me show you one of them. Well, okay, I won't be able to have to share my screen, but the bottom line is if you go to thestockmarketwatch.com and click on markets, pre-market, every morning you'll see a list of stocks that are running. This morning, CXAI was on top, and if I'll show you the chart we traded that. Starbucks certainly was a big trade for us today, and a few others from that list did well, but there was others that came in after. But my key is I'm on in the morning at 4:45 in LA, which is 6:45 Eastern. So wherever you live, that's the time to be on with me. Now, I actually don't put up my charts until 45 minutes later, but I'm looking at creating a list of stocks that we call a focus list. I publish that focus list. And from that focus list, I will pick upwards of 3 to 6 pre-market stocks that I think are ready to be day traded. And I will give you several others after the market opens if the patterns are right and if the volume's there. What I look for in terms of preparing the focus list of potential day trades, what criteria I use, and what the highest probability candidates are, include the right setups, the right patterns, and the right technical indicators. I want to narrow down my list using price volume surges, combination price and volume. I want to see stocks that are moving 5 to 10 times normal volume in the pre-market. Now, TC2000, which I use, is a phenomenal charting pattern, and I'll show it to you in a minute. But when you go to that TC2000 program, they have something called volume buzz. Nobody has volume buzz. This is something I've never seen before, but it's extremely useful in trading because volume buzz shows you the amount of volume traded in a stock at any one moment in time during the trading session, even pre-market. It shows you what that volume is as an average of the last 100 trading days. And if you're seeing something 5, 10, 15, 20 or more times normal volume, that tells me that there's something going on, obviously. And there's a lot, not just that, but there's a lot of what I would call sponsorship behind that. A lot of volume. To me, it's very, very big on volume. When I see particularly a low price stock that isn't trading much normally, it suddenly trades, 1 million or 2 or 3 million shares pre-market. I pay attention to the patterns because they often will trend and be strong. Now, secondly, during the trading day, once I give you those charts, you need to know how to focus and what you focus on. Number one, you focus on maintaining the chart patterns during the trading session as the trading session unfolds. And that's what I do for you. When you come into my site, and by the way, it's free for 2 weeks. Click on the upper right-hand corner, which is to start a free trial. And this comes up. Just put your name and your information in. No credit card necessary. And folks, you'll be happy campers. Take my word for it. 2 weeks for free. Most people tell me they make enough to pay for a year's service in just 2 weeks of free trial. But you need to put the time and effort in there. If you're an experienced trader, it's a lot easier than if you're not. But I'm a teacher. I show people patterns nonstop all day. I explain why the patterns are developing, how the volume patterns are affecting those patterns, and I also show what the best early price volume patterns. And I show you those to narrow down a focus list. There are certain patterns that occur, certain formations that occur that and I'm going to show you some examples from today, from this morning, of stocks that we traded today based on those patterns. During the day, you need to pay close attention to the trend and determine where possible intraday divergences are, where entry and exit levels are, where support, resistance, moving averages are. And the unique part about my site is I come on periodically every 45 minutes, maybe even every 10 minutes if I think it's necessary. I see something breaking out, and I will show you visually, because my webinar is on all day. Once you log into my webinar, it's not off. That webinar never it comes off. You'll see me working my charts. You may not hear me, but when I click my microphone on and say I'm giving you an update, then you want to pay attention to why I'm coming back on, because I'm usually talking about changes in the patterns and changes in targets and stops and things of that nature. The third thing I want to focus on, and I know we have limited time today, so I want to get to the charts, but I want to emphasize to you that discipline is extremely important. You cannot trade without stops. Trade management is critical. Scaling positions in and out. You don't need to sell or buy everything all at once. You can buy when stocks break certain levels or sell when they break certain levels. And you can do it in a scale. When I issue a buy alert, I will issue at least 2 targets and at least one stop. I sometimes issue 3 targets and 2 stops. It depends on the stock and how active it is. But during the day, I'm constantly coming back on, showing you the patterns, showing you where you need to raise your stop to, or I'll say exit a third of your position or half of your position here at the target number 1. As target number 2 comes up, we may exit another third to a quarter and then have a little left to play with house money in case the thing blows up, which we've seen a lot. And so the prudent use of stops and targets during the trading session is imperative. And you also want to be able to not overtrade, and you have to determine your position size. I can't get into that today. I don't have enough time. But in general, if you have a $100,000 portfolio, you never want to put more than 25% of any of your portfolio in any one stock in case it blows up on you. So you have to maintain discipline, and you should know what position sizing and trade management and stop losses are all about. That's my little spiel about what I feel is important in trading. Again, it is proper preparation, be there early. Once the market opens or once the trading starts and you're involved, even if it's pre-market, you need to pay constant attention. You're either a trader or you're not. You can't do this part-time. You got to be there mentally. Don't trade on a bad day. If something's wrong in your life, you're having a fight with your wife, money problems, whatever it is, do not trade that day. You will make mistakes. It will cost you even more. And and here's the problem, the problem, folks. Most people have to maintain a clear mind. If you don't have a clear mind when you're trading, it is extremely difficult. Trading's hard enough without those distractions. If you're distracted, don't trade. If you're coming in a good mood, in a clear mind, and you got good energy that day, that's when you should be trading, making most of your trades. And by the way, I just want to point this out. 80% of the top traders I know don't trade much at all. They wait for the right opportunities and then they jump on it. Because if you see the proper trade setup, you can make a lot of money in a very short period of time. In my site, some of the trades we make are 8, 10, 20 minutes. That's it. Some of them are 1 or 2 hours. But the truth is, the swing trades obviously can be days, weeks, and even months. Because if a stock that I put out as a swing trade continues to, press higher and hold support and hold the channels and moving averages and keep moving up, no reason to sell it unless, of course, you had a certain target in mind and you wanted to scale out at least a portion of your position to move on with some of your capital and trade something else. I'm a trader, so I trade. If you're not a trader, don't trade. And it may not be the right site for you if you're not an active trader or you're not a swing trader. If you have to work and you cannot come into the site all day and sit there, then probably you should be a swing trader. And it's very, very reasonable price for my site for swing trade ideas, and a lot of them work really well. So I want to get to this. I want to get to my charts. I think I'm going to have to. You can't see my charts right now. Am I correct? I need to reshare them, I believe.
No, I can see your charts. It looks great to see.
Oh, you do? You can see them now? Okay, good.
Yeah, it looks
So
good.
So here's what I want to do. I want to show you, this is the stock CXAI. We came in the morning. And this, by the way, this is what it did yesterday. It exploded and pulled back and coiled. And through the entire morning, pre-market session here. See 5 a.m., 6 a.m., 7 a.m. It coiled, and then here's where it popped out, right at the opening. That's where I put a day trade on. It was about $2.68 at the time. Immediately popped to 294, pulled back and coiled for an hour, and then exploded. And it did it in a Elliott wave 5 1 2 3 4 5 wave move. I told everybody the targets were 330 and 375. Here we hit 334. And here we hit 375 to the penny. And so we got out of that trade. It was perfect. So we exited half here and half there. Or I always tell this to everybody, if you're not exiting there, you stop it there. Meaning when the stock pulls back and bounces, once it pulls back and breaks out that last pullback low, you're out. I'm a big believer. You can stay in a trade all day if you simply do this. Watch this. Here, you see these two pullback lows? That's your stop. Once the stock broke out, I have a stop there. Once it pulled, it ran up and backed off, I put a stop there. It broke out, I raised my stop to the prior pullback low. Then I raised it there, and I raised it there, and I raised it there, and there. And finally, we're stopped out there. If you didn't sell when I told you to, worst case scenario was you were stopped out about 344, 45. It closed at 272. You cannot let moss grow under your feet when you're trading, folks. Don't sit waiting for a stock to come back. It may never come back. It may continue to go down and destroy your account. Must play stocks with stops, particularly in my room when you're day trading. Example number 2, Starbucks. When I saw that Starbucks had a new CEO, they announced today that the CEO is stepping down and they're bringing in a new CEO. Guess what? He's the ex-CEO the current CEO at Chipotle is leaving to go to Starbucks. Wall Street loved it. Chipotle has a phenomenal record, obviously. Anyway, I want to point out this, and the best way to show you this example is to do this. This is what it looked like when we came in the morning. Spike, see it? And these are very sensitive, by the way. Then it did that. That would be a bull flag. This is where we went long. I said if it breaks out over 86, we're going long. This was a fantastic trade today, one of the better ones in a while. Here's what happened. Another flag developed. So we already have a 1, 2, 3, 4. I'm looking for more. My target was 90, 92, and 94.5. Let me show you that. Coming out of the flag right there, you see it? It got up to the high and backed off. Boom, breakout. And it's already at target number 1 right there. Trending higher. Boom, target number 2, 94. I put out another target. I said, the way this looks, I don't know if it's going to 96, 7, 98, but it could. But what it really did was after such a big move, it took the stock from 77 to 95. That's a huge move, 18-point move. For large cap stock is a rarity, but it's a good one. And then a flag developed, or a falling wedge. Let's call it a falling wedge. Late in the day, I told my people that if this stock breaks across here, right there was the breakout, and then a quick pullback. It coiled and then it broke out. And check this out. After hours, it's still trading up, I believe. Oh, sorry, we're not closed yet. 45 minutes to go. Check this out. We're at the highs for the day. As we speak, trading at 95.68, up 18.53 today. So that was a fantastic day trade for us. CXAI was as well. And then we also traded apps, which did great when it broke out across this line. I follow the stock very closely because it's a swing as well. Let me show you why it's a swing, folks. By the way, this is one of the biggest percent movers gainers I ever had in the history of my website. I first gave this stock to my people when it crossed $3 here in 2019. It went from 3 to 103. I would say that's 35-fold increase, something like that. And then it obviously got creamed, like many stocks in long terms. But take a look at this long-term declining tops line. This is the daily. Take a look at the inverse head and shoulders, the breakaway gap, the close above the neckline right there. And so when it crossed the neckline, I put a swing on it with targets at 4.25 and 5.5, and maybe much more. And this could be the beginning of a big move. Today, after pulling back yesterday, we have a bullish engulfing bar. Volume is picking up, but unbalanced volume is really the key, and that's doing very well. So I'm thinking apps is a good one. I also put a day trade on it. When it crossed this box here, put a day trade on it about 290. My target was 3.25. We hit 331, and then we hit 340 some odd before backing off. Again, these are the kind of things we look at every morning. Stocks that pop and consolidate. In this case is a pop and a coil. Take a look at this. I'll go back on this one too. A beautiful coil developed. And notice this line, it was unable to get to 490. So I said, as soon as this crosses 490, we're going in for a day trade. If it comes with volume. By the way, big believer in volume. A stock without price without volume or volume without price are meaningless. They have to have both. So it's got to pop with volume to break out and get a trigger move. In the case, look at that volume bar right there. Pop, break out, and here's what it did after. We were long there. That's a flag developing, and it broke out of the flag. My target was 540, and guess what we got? 540, I think exactly before caving. Let's see, maybe a penny short. 539. So we got within a penny of my target and rolled back. Consolidated for hours, and that's where it's at right now. But a successful day trade from there to there took us from about 490 to 540. 50 cents on a $5, a 10% pop, and it only took about an hour and 20 minutes. SPRY. This morning I saw the stock, and I want you to also see the daily on this. Note, there's a long 2-year base pattern. And note that I drew a line across the highs. We popped aggressively across that. At that point, I put a swing on it. That was back in here when it consolidated. But what attracted me this morning was a pop coil. The coil is basically simply tops narrowing while the bottoms rise, and it comes to an apex and breaks out. That's where the breakout was. But that was after hours last night. Let's see, where were we? Here we are in the morning. The pre-market, it broke out right there, 11:55. Before the market opened, it was 12.25 or 70 cents. Then it pulled down after the market opened, bounced it from the flag, and I said, if we break out this declining top sign and out of that flag, we're going for a day trade. It went from 12 to 13. Right now it's at 13.05 and breaking out yet again of a 3-hour flag pattern here as we head into the close. Market's open another 10 minutes. And you can see my target would have to be a 13.5, give or take time. It may come after hours. SE, another wonderful example. It's a stock I know very well. They're a Chinese gaming developer, I believe. I saw the pre-market pop and coil. And then I saw this, but I want to go back and show to you what it looked like then. Right there. So what I saw was a hard hit, a V-bottom, what we call a platform coil breakout. That bar right there broke it out. Notice the volume picked up. That's where we went long, pre-market. It then ran from 66.88 to 69.5 from the flag. And I go, folks, we're going higher. I think my target was 71.5 and 73 or something like that. Let's take a look at what it did after that. Pop 72 from a coil or a little pennant, and it's still looking good, isn't it? And what do you do in this case? Raise your stop. Raise your stop. That's a little tight. I would wait to raise my stop. I'd keep it right there about 70.5. But this line means there was an important technical breakout and formed a rising flag, which is very bullish. Rest of the day, another flag, another pop. We hit the channel top exactly. And where? 74.61. I said 74.5 when it broke out of here, 69. So another good trade, purely based on intraday technical patterns. And here it is, right at the close, still coiling. When NVIDIA popped today, NVDA started to move. I said, we're going to trade NVDX, which is one of their tracking stocks. That's a cheaper, more leveraged one. So we saw a pop and a coil. It broke down, but I said, let's wait to see if it recovers. It did right there. It went long at about 13. It got up to 1340 and pulled back, held. We raised our stops to under there, and we raised it to there, and we raised it to there. But notice that it kept stair-stepping its way higher until it got to 1370. Not a big trade, 70 cents on a $13 stock, about 5%. But look, NVIDIA has the capability of exploding. This stock has not broken support yet. Little UIS, I know this company very well. Unisys is the old Sperry Rand Burroughs merger. And I cannot get over the fact that that was such a huge company at one time. And the stock's $4. Here's a long-term look at it. Yeah, 497. All right, anyway, that's when it was Burroughs, I believe. So what we have here in UIS is a daily 1 minute chart that showed me this spike flag. So I put out a buy on break out of the flag at 398. Here we are near the close at 426. Not a lot, but hey, it's still going. Here's 427. And trending in a beautiful rising channel. There was no reason to sell this stock all day. Never broke a low here, or there. So that's how you stay in a trade, by continuing to raise your stop below the previous low, ideally in an uptrend. My robot popped and formed the rising flag. When it broke out, we went long at 795. It then went to 8.5 and pulled back, and it's still standing here. So this is one of those stocks that you could have scalped or traded out, or you still have it, and you're waiting to see if it breaks support, and that's your stopping point right about there, right on top of support. Carvana exploded, coiled. It was a buy when it broke out. I put a buy out at 143.5. It only got to 145 installed. So it wasn't a great trade, but you didn't lose money, and you're still long into the close. Market closes in 6 minutes. Dell. I've been watching Dell. Well, Dell's an old swing, and believe it or not, I put a swing on Dell a few months ago at 69, and it got up to 150. Something like more than doubled. Anyway, I also look at intraday rising channels. Now, this is yesterday, and this is this morning. It popped, pulled back, it broke out, it had a really good hit at the opening, but it recovered beautifully. Never really got into a good trade on this. Never put it out, but I was watching this carefully. Nike, yeah. When you see a line pattern like that and suddenly explodes, look at the volume right there. 500,000 shares in 2 minutes on a pop, and then had a rising flag. This is where I put a day trade out on it. It's 76.5. It ran to 70, almost 80, 79.95. So a 3.5 point pop, and now a beautiful bull coil. Something to watch for tonight or tomorrow. Here's one that didn't work. GCTS. I want to show you what I was looking at and why I put a buy on it. Right there, I saw a pop and a wedge. I did put a buy on it at 405. Immediately, quickly ran and a scalp to 489. So yeah, actually it did work. But look at the rest of the day. If you were quick enough, it quickly plunged and went nowhere the rest of the session. So sometimes that occurs. Here, look. It's trying to base. It broke out, but then it retested. I just never got a real good trade on this one. Unless you were long quickly in the morning, and were able to take that wedge right there and pop it and make money out of there. You had to be quick on that one. And so yeah, just a second. IONQ, another example of a pop and flag, and then a break of the flag, and that's where I went long at 710. I got up to about 732. Rest of the day didn't do much, but a little scalper play there. Verona was a real good one. What I noticed on this one was like a little inverse head and shoulders, or V bottom of the right hand extension, but the neckline and the consolidation resistance was right there. That one bar triggered my 56,000 share up bar at 25.08, I remember. And then it popped and flagged and broke out, and it kept going. It got all the way up to 28.35 from 25.08 for 3 points. And it did it in a 1, 2, 3, 4, 5 Elliott wave type move. And lastly, Microsoft. Yes, I do trade the higher price stocks as well. Microsoft popped, flagged, and when the market opened, it went vertical. At that point, it formed what I call a falling wedge. We put a buy on it when it broke out at 411. They made it to 415, 4 points. You know, it's really not a big trade, but it's $4. Some people like trading high price stocks because you know they move in bigger pieces, but not bigger percentages. So anyway, what I wanted to point out to you guys and gals is that this is the kind of trading we do every day. Stick with me, come in, stay with me, watch, learn, and listen and apply, and paper trade if you're not a seasoned trader. If you're learning more about trading, you can take my ideas and do a paper trade here. Practice TC2000. You can do that, and you can do it anywhere. But more importantly, keep a trading log, folks. The number one thing I want to leave you with today is trading log, meaning log every trade before you make it. Make notes on what the stock did and why, and review that every night. And take a look at where you made mistakes, where you could have done better, why your emotions may have got the best of you, because that happens so often. And look, I'm a type A guy. I've learned it took me 20 years making mistakes before I learned how to be more disciplined and focused. It won't take you that long if you're not a type A person. But if you're a focused, concentrated type person, male or female, by the way, I find that women are better traders than men in general because of their, they just are able to focus better and are more disciplined. At least that's what I'm finding. But some of the best traders in my room are seasoned ladies. So folks, that is it for me for today. I just hope you gleaned something from what I've talked about in terms of what to look for pre-market, how to manage your trade, and join me at thetechtrader.com and spend a couple of weeks with me, and I think you'll really enjoy it. Ken, thanks for having me. Appreciate it.
Thanks, Harry, for being here. You're the best. And Harry really is. He's the best. Outstanding, technical, brilliant guy. He picks breakout charts that really go for a very long way, very consistently. And one thing that that he's talked about that I heard the other speakers talk about is trade management. And it's really important that traders learn more about that as well as the pattern. So Harry's your go-to guy, thetechtrader.com. Try him out. Harry's the best in the business. So thanks, sir, for being here. I appreciate it.
My pleasure. Look forward to doing it again. Talk to you later.
Absolutely. Absolutely. Lifetime invitation. Thanks. All right. Well, next we've got my longtime colleague, Steve Nissen from candlecharts.com. Steve, how are you doing?
I'm doing fine. Thank you.
Well, let me go ahead and turn it over to you.
Okay.
Let's see. You should be good to go. Let's see.
Okay.
Just click on the share.
Okay. Okay. So we're good.
We are good. Let me go ahead and introduce you.
Okay.
Hey, traders, Steve Nissen is the founder and president of candlecharts.com, highly recommended, which provides premier educational products and trading services. Traders and investors everywhere have discovered the power of candle charting because of Steve's groundbreaking work. And Steve has brought so much to my life and my traders. He's a brilliant guy. He knows his stuff and what he teaches works. So that's important. So anyway, Steve, thanks for being here, and I look forward to seeing your presentation.
Thanks, Ken. And I found somebody actually talks faster than me. I'm impressed. Anyway, thank you for joining me. A little background. Many of you hopefully are familiar with my work. I was the first to reveal candlesticks to the Western world. I can't believe it's back in 1990, maybe late 1980s.
Yeah, no, Steve, I was going to mention, I cannot see your screen. Are you sharing it? Let's see.
Yeah, let me try this again.
Yeah,
let me see.
Click on the green share icon and then.
Yeah, let me move it onto another screen. Let's. Oh, there we go. I have to click share.
We'll do it. There you go. Okay. We're good.
Okay.
All right. Take it away.
Duh. Okay. Thanks, Ken, for the heads up. And just before we begin, just the risk disclosure, you're going to be tested on this a little bit later. Just kidding. Just remind you that there's a risk of loss of trading in any markets and in any time frame. Now that that's out of the way, what we're going to focus on in this very brief session is my trading triad. Okay. And triad is Latin word for three. And we're going to be focusing we're going to be touching on candle charting techniques. That's what I'm best known for. But I also have 30 plus years experience in Western technicals, and we'll look at the importance of combining candlestick timing signals with Western indicators. Keep in mind everything. For example, I heard Harry talk about different patterns and so forth. Everything that you heard from the other speakers about Western signals, you can definitely, and you use with candles and candle charts, and you definitely should. And we'll look at that in a minute or a couple of minutes. And Ken mentioned trade management at the end of Harry's talk. And so we're going to look at that as our third leg of our trading triad. Now, for those of you who are new to candles or candlesticks, just to remind you of the benefits. Okay, they're very easy to understand. Okay. Safety first trading, knowing what to avoid is just as important as knowing what trade or investment to get in. Okay, as I just briefly touched on, and we're going to be looking at a little bit more detail, we're going to be looking at the power of, or the synergy of Eastern, that is Japanese candlesticks with Western charting techniques. Okay, they work in all markets. I've done joint seminars with Ken about intraday trading. They work in all markets, in all time frames. I mean, we have students from 85 countries, speaking of all markets. And the real power of the candlesticks is those early reversal signals. So for those of those of you who are fairly new to candles, just to remind you why the candles, although they use the same information as the bar chart, open, high, low, and close, they give you so much more information. So just to remind you, a green real body or white real body, depending on your charting system, means that the opening is down here, the closing is here. The shadows, the top of the upper shadow is the high of the session, and the bottom of the lower shadow is the low of the session. Flip side, open here. If you have a red real body, close here, high of the session and low of the session. So we can actually see very quickly, at least during that session, whether it's a 1-minute session, a daily chart, a weekly, it doesn't matter. Who's in control? Well, obviously the bulls with a long green real body. Here, the bears are in control. Then the question is, who's in control here? This is a doji where the opening and closing are the same or nearly the same. And, who's in control? Well, the answer is really nobody. It's an equilibrium between the bulls and the bears. The real body or lack of real body relays that. Now, there are a lot of misuses of candlesticks, and the goal, hopefully, that you'll take advantage of with our education is make sure you use candlesticks correctly. Okay, since I was the one who had all the original source material, I had many, many Japanese books translated from Japanese to English. To make sure you use the candles correctly. Hopefully, you'll take advantage of some of the things we'll be talking about a little later on. I want to also thank Norm for mentioning me in his seminar as the go-to source for candles. Anyway, one of the misuses of a doji, if you just go to the internet, you might see, hey, it's a reversal signal. It's not. A doji during a rally means that the market is tired. There's an equilibrium of forces between the bulls and the bears. And what that means is the trend has gone from up to neutral. It doesn't mean it's gone from up to down. But doji are really great, as many candlestick signals are, for support or resistance. And we'll look at examples of that in a little bit. So let's look at one of my trading principles. I have about 15 core trading principles. And this is the advantage of the candlesticks. That's why they are now the default chart pretty much on every charting system around the world. And it's pretty cool when I meet somebody and we talk about candles. I say, oh, that's because of me. That's why the charts are drawn that way. So, and there's a reason for that, because the candlestick line shows not only the price, as does a bar chart, but it also shows the force behind the move. And how can that help you? Well, let's look at this. Just a couple of weeks ago here in this particular stock that we were following for one of our students. Okay, notice in the rectangle here, some of you may recognize this candlestick signal as a shooting star. But the point is, what was happening on these sessions is day after day, and this happens to be a daily chart, the market was making higher highs and higher lows. So traditional bar chart, this would look bullish. But now that we understand, or start to understand, that we could look not only at the real bodies, but the shadows, think about what the market is telling us. It's moving up, but the long upper shadow tells the market rallied, sold off, rallied, sold off, rallied, and sold off. And what the Japanese say, actually, this is from one of the Japanese books I had translated, they call this a market rising in agony. So it's a warning not to follow that short-term trend, because a lot of the candlesticks insights, we're seeing the market, it's rallying, but it's coming across a lot of selling pressure, session after session after session. And again, this could be A daily chart, a 5-minute chart, doesn't matter. And another negative is, notice what happened. It broke above this resistance area, but wound up closing below it. So two warning indications that if you were long, I would think about moving up stops, maybe lighten up on long position, just protect yourself. But I certainly would not be adding to long positions here in spite of the market making a little bull channel. And this is the type of insight you get with the candlesticks. Now, for those who trade options, I mentioned that candles work in all markets and all time frames. Candles are great for options also because trend far and away, as we know, implied volatility is really important. But direction is the single most important thing you need to know to potentially make money in any options trade. And candles really excel at those trend turns. So for example, here, this is a hammer. Some of you may recognize this candlestick signal. So let's say we bought, and I did this a little while ago as a theoretical. You buy in the hammer, the market closed at 395. All right. So you do an at the money call. Okay. It's priced at 1130 theoretical value. And we exit at the doji here. Tell you a doji is a warning signal. Okay. I wouldn't go short here because it's still no high close, but it's a good time to think about taking profits. So you're looking at a potential 320% return. If instead you were just using a Western indicator, for example, a MACD, okay, you would have gotten the buy signal on the MACD with a crossover over here. So you would have done an at the money call, and you would have made 132%. A nice return, but this is what candles are all about. Okay, we call them missing candlesticks because you're learning candlesticks the correct way. But by that early reversal signal, especially, I'm going to look at this in a couple of minutes, this hammer confirmed a recent low. So you're getting confirmation of support. So no reason not to be aggressive on this particular trade. So a nice example, whether you use options or not, how the candles give you those early reversal signals. Okay. One of the key concepts that we focus on in our ongoing education is what I call candles in context, looking at the candles in the context of the overall market conditions. So for example, in the previous slide, notice there was a hammer. In context, it also confirms support, so that increased the likelihood of the market reversing. So one of the things that we will look at is candlesticks plus Western indicators. Okay. These are just some of the Japanese books I had translated, all right, years ago. These are all the English translations. This whole binder here is the English translations of all the books. It took me, or the translator, a year to translate them, and then it took me a year to put this all together in a coherent way to write my first book. But the reason I wanted to show you that is because in each of these books, they all had Western technical indicators on them. Okay, and what the Japanese have been doing is combining candlesticks with Western indicators, and that's what I strongly suggest you do also. So for example, candles in context. Here's a doji. Okay, is the doji, and this is a resistance area, and this is a support area. So is this doji telling us anything different than the market kind of being in the middle of what the Japanese call box range? Not really. So I would tend to ignore this doji, not make too much out of it. However, what if the doji confirmed a resistance area? Okay, what that means is I would be more nervous if I was long, or speaking of options, if I'm thinking about doing a long put, or if you trade Forex, it's very easy to short. You may want to think about shorting. Of course, always have a stop. Normally we place a stop above the high of the doji on a close. So you could see, you could have doji, the plural of doji, by the way, are doji. You could have a doji here, and how you trade or invest with them is completely different. That's what I mean by candles in context. And this is the value of education. Okay. So one of my key concepts is using candle line at support or resistance. In fact, one of my simplest and my favorite trading strategies is simply looking at horizontal support or resistance and seeing if a candle signal confirms that horizontal support or resistance. So let's look at this. So let's look at the support area first. Again, this is crude, just going back a couple of weeks. Okay, so This is in June. Some of you may recognize this as a bullish engulfing pattern. A green candle wraps around a red real body. And the low of the bullish engulfing pattern, as I mentioned before, many candle signals can be used as support or resistance. The lower the bullish engulfing pattern should become support in the close. And look what happened just last week. It got under it, but didn't close above it. And what is this? Another bullish engulfing pattern. Okay. Candles are not going to tell you how far the market's going to go. But the fact that even if this wasn't a bullish engulfing pattern, the fact that this bullish engulfing pattern confirmed a support area greatly enhances the likelihood of the market turning. Flip side, here we have a doji, okay, back in May. And as I mentioned, when I talked about doji, very often we'll use the high of the doji as a resistance area. So the market sold off, and it doesn't always sell off after doji. Some of you may recognize this more advanced candle signal as an evening star, but we could look at the doji, make a resistance line, and right at the resistance, okay, we have a shooting star. Not quite a shooting star, the upper shadow isn't long enough, but it doesn't matter. You know, even if this wasn't a shooting star, we get the fact that it is just adds likelihood the market's going to turn. So we had a shooting star confirming a doji's resistance, greatly increasing likelihood of a market sell-off. It doesn't mean that the market's going to go down to the low of the bullish engulfing pattern, but again, this is what I mean by east and west. Intraday chart, okay, on the pound. Okay, a lot of you trade intraday. This is a bearish engulfing pattern. Okay, you use the high of the bearish engulfing pattern as resistance. This is the dark cloud cover. For those not familiar with it, it's the same as a bearish engulfing pattern, but it doesn't quite wrap around the green real body. So we have a candlestick signal. Again, even if this wasn't a bearish engulfing pattern, even if this is the high for the move without being a bearish engulfing pattern, you use that resistance line and see if you get confirmation. You got confirmation here. If you sold here in Forex, you just keep a stop above the high over here. My target would actually be the recent low of the bullish engulfing pattern, which it coincidentally got to. Over here, that would have been my target. So good risk reward. We'll talk about risk reward in a minute, or a couple of minutes, because if you sold it here, your stop should be here. You always have to have a target. My target was down over here. Now, one of the great things you can do with candles also, as I alluded to or I mentioned specifically before, is you could use all Western indicators. And because candlesticks don't give price targets, okay, we should be using Western technicals to confirm a potential price target. So some of you may recognize this. You have horizontal resistance. You have increasing support over here. Okay, this is called an ascending triangle. Now you have high lows and horizontal resistance. Now, once the market breaks above this, you then could use a traditional Western charting technique. You go from the low of the triangle, the ascending triangle, to the high, and then you take that target and you just add that height to the breakout. Now, keep in mind, a target doesn't mean it where the market's going to stop. It doesn't mean that it's not. It's just a minimum target. Put it that way. And see what happened right over here. Got the target. Happen to have a little bit of a reversal signal here with the bearish engulfing pattern. But you can see, and here, nice example of using the candle lines itself. Who's in control here? The bulls, right? Strong green real body, open here, close here. Now, although this was a green real body, very small, long upper shadow, so a little bit of a hint that the market was running out of steam. Still somewhat bullish because this is a new high close for the move, right? Close here is higher than there. And here you got a little bit of bearish confirmation that the market was tending to stall. But the goal here really is to show you how easy it is to use price targets. You could use head and shoulders, you know, and my favorite is actually a box range breakout. The Japanese call lateral trading environment a box range. So go from similar to the ascending triangle, you go from the high of the box to the low. I sometimes use a range right over here. So there's the bottom end of the box. So I'll use the kind of the middle of it. And you just add that distance to here. And the reason I like the box range breakout, and it's kind of the same concept with the ascending triangle. I made the analogy years ago. This is kind of like a coiled spring. And once you get above the resistance area, it's like the springs pressure being released. And one of the strategies I use, I didn't plan on talking about this, but I use change of polarity. What I call change of polarity, essentially old resistance in theory should become support. So once the market breaks above the highs here, look at old resistance. Once it breaks above it, this old resistance should be support. So if you do buy in the breakout, you just keep a stop under here and you have a target right over here. Right? Okay, misuse of the candles. Okay, we got this a while ago from when I was students, and he knew about the shooting star. He or she knew about the shooting star, and the market rallied after that. And he said the candles don't work. And we said, you know, candles are not 100% by any means, but make sure you understand how to use them correctly. Okay, just because you have a shooting star or a bearish candle signal doesn't mean the market's going to sell off the next day. And in fact, I said, I think this looks like a good short trade because it confirmed resistance. If you're selling it here, you have to be willing to have a stop above here. And this is what happened after. So this is the importance of education, understanding really how to use candlesticks correctly. Obviously, he didn't, but I think he understood pretty quickly after that the importance of ongoing education. So let's look now at the third leg of our triad. So we briefly discussed candlestick charting techniques, the early reversals, how to use the real bodies and the shadows to get a sense of the force and momentum, candles and Western indicators, you know, having candle signal confirming a Western indicator like support or resistance, and using Western indicators to get potential targets. And these are all well and good, but this also is key, and I strongly suggest not doing a trade until you understand what I'll be talking about next. Okay, so highlight it in your notes. All right, risk reward, one of my core trading principles. Okay, a candle signal, even if it confirms other indicators, is not enough of a reason for a trade, or we could put in for an investment. All right, you must always consider risk reward. Okay, I'm going to keep this on for a little bit. I want this to be etched in your brain. Right? All right, and as we know, or maybe if you don't, for those new, reward is your profit potential. You should always have a price target when doing a trade. And what you have as a target may be very different than what I have as a target. All right. So, but whatever your profit potential is, that's your potential reward. And your risk is obviously the potential loss. And one thing I would strongly suggest, something we all do here at candlecharts.com, is place a stop as soon as you do the trade, a protective stop, because that's when you have them, that's when you're most rational, right? If you put a trade on, and some people could do this, they have good mental discipline, but most people who put a trade on say, I'll put a stop in later, will always second guess themselves. The market will start going against them. They'll say, let me wait and see. I know I'm going to be stopped out, and then the market's going to reverse, and a little loss becomes a big loss. So I would suggest, you know, depending on your trading temperament, put in a stop as soon as you put the trade on. And if the market starts going in a direction, you can always move the stop higher. So let me ask you here, okay, which is a better trading signal to sell? And when we say sell, doesn't necessarily mean to go short. Okay, it means to protect yourself. And by the way, selling is certainly easier to do, as I mentioned before, with options and Forex. But selling, generally, most of us don't sell short in equities. So by selling, I mean a bearish signal to lighten up on longs, move up protective stops, and so forth. So here we have a bearish engulfing pattern. Okay. And when I did this chart, back then my charting system was black and white. So, you know, instead of a red real body, it's a white real body. Instead of a red real body, it's a black real body. Same concept. So there's a bearish engulfing pattern. And here we have a shooting star, long upper shadow, small real body at the bottom end of the trading range. The upper shadow should be at least twice the height of the real body. So they're both potentially negative signals. So which is a better signal to either sell or to protect your long positions? And the answer is we don't know. And why is that? we have to look at the risk reward. All right. We can't look at candles by themselves. That's part of the concept of candles in context. So here we have that bearish engulfing pattern right here. And here we have the shooting star, which also happens to be a doji. So let's think about this. We wait for the close or near the close. This is when we get the bearish signal, right? So if you sold it here, right over here, your stop would be up here. My target, yours might be different. My target would be the hammer. And you see how the hammer, as I mentioned before, a lot of candle signals become support or resistance. The hammer would be my target. That's a bad risk reward. You're risking this much to make that much. Here on the green arrow, we have a doji or shooting star confirming a resistance area. So let's say we sell or protect a long position over here. We move up stops. I would be more comfortable selling here, put it this way, than here, because let's say we're shorting. All right, it's an option trade. Imagine high price stock. The stop would be above here. Okay, so that's your risk, and my profit potential, it wouldn't be down here anymore. And the reason for that is it looks like we have a support area right over here. Okay. Okay, we have a trading concept called being a market chameleon, adapting to the market. So initially on this session, my target would have been here, but since the market has changed, we have to adapt to it. So my target would now be over here rather than down here, but that's still a great risk reward right over here. All right. Okay, here's another example of the importance of trade management. One of our students, Gary, had this. There was a bullish engulfing pattern. This was, I think, a 4-minute chart. A bullish engulfing pattern. Once again, it doesn't matter what time frame it is. Bullish engulfing pattern, which was a positive. It held support, right? All right. It broke above a falling resistance line. He bought over here. Was that a good trade that didn't work out, or did I make a mistake in judgment? And the answer is he made a mistake in judgment. He had everything correct. He had the bullish engulfing pattern correct. He had the break above a Western resistance area, falling resistance line. He had the candle confirming support. But what he forgot was a third leg, the trade management. Okay. Okay. He actually should have been down here. If he bought here, okay. Okay, this was actually, it should have been a little lower right over here. This was his stop out level from here to down here. And to me, it's pretty obvious where the resistance is. Okay, right over here. So at best, it's a 1-to-1 risk reward, even if it, from here to down here. But it's actually less than 1-to-1 risk reward. So this is a trade I would step away from, although we had the candles, we had the Western technicals, but the third leg is really the signal to pull or not pull the trigger. Here, we saw this before. All right. We had this bullish engulfing pattern right over here. All right. All right. Well, we talked about this over here. We had the bearish engulfing pattern. This on the intraday, a shooting star confirming resistance. Look what we had down here. Another bullish engulfing pattern, a bullish engulfing pattern here. So let's think about this from a risk reward perspective. Okay. This confirmed almost exactly to the pip a bullish engulfing pattern. So, but we didn't get confirmation until here. Let's think about this risk reward. Okay. The bullish engulfing pattern was completed here, right? It's tested here, but it's completed here. So if you bought here, this is your risk. It's actually, down to here. This is your risk. And I think we'd all agree what a very evident resistance area would be over here. Okay, how many of you would do that trade? Okay, I hope nobody raised their hand. So this is a nice chart. This was just I think this was August 5th, just a couple of days ago, a week or two ago. But this is nice, kind of brings it together how important risk reward is. So what we've touched on is some of the basic aspects of the trading triad. I think even with this little information, you could see how valuable the candles and ongoing education is. So with that, we're going to offer you a free resource. Okay, you're going to get if you go to this link here, candlecharts.com/welcome, you'll get my most important trading rule. Okay, and the 4 common and costly mistakes almost every trader makes. And all of this is free, right? And so those are some of the free resources, right? Total value almost $200, but you get it for free. And as a extra, you're also going to get a free consultation, okay, with Paul, president of CalCharts.com. And what he'll do is design a customized plan dependent on your specific trading or investing needs. So just go to this link here to get your free resources. And if you want a free consultation, okay, you'll fill out the form. And as a special bonus, okay, when you register, we're going to give you a cool 1 minute, it'll probably take you less than a minute, what we call the Calendar Charts Fun Quiz. So go to this link and look forward continuing to work with you as we move down the path to correct candlestick education, where you'll also learn our favorite Western charting techniques and the third leg of our trade and triad, effectively using risk reward and other trade management features. So thanks, Ken. And
Well, thanks, Steve.
good.
Well, thanks
So-
so much, Steve Nissen. Outstanding training as always. It's good to see you here, and wanted to say thanks on behalf of everybody. And thanks so much. It's always good hearing from you.
Great. Okay. Thanks, Ken.
All right. Well,
And everybody,
next
thanks
up-
for joining me. Okay.
Yeah, great. It's at candlecharts.com, world's top expert. So next up, I'm honored to have Tom Sosnoff with us here today. Tom, are you with us? We'll be there in just a minute. So Tom, I'm clicking on the unmute and co-host. So you should be able to click on where it says be a co-host and you should be able to present. Bear with us, folks, just a minute here.
Hello.
Hello.
Hi, we're just getting set up. Can you give us like a couple minutes?
Absolutely.
Okay, give me 1 second.
Okay. While you do that, I'll play something right quick. For entertainment. So how are we doing? Let's see, I've got you as co-host and unmuted, so you should be able to click on the share screen icon, the green one at bottom, and take it away. Well, folks, let me introduce Tom while they're getting squared away with the tech. Tom Sosnoff is an entrepreneur, options trader, co-founder of Thinkorswim and Tasty Trade, and the founder of Doe Inc. Tom was the Senior Vice President of Trading and Strategic Initiatives at TD Ameritrade. Sosnoff promotes option trading as a financial strategy for the individual investor. He's a great guy. He's always a keynote at the Money Show events, and he says trade small, trade often, which is wise. And I used to watch his Sunday YouTube show a lot too. So a leader in the industry, and it's great to have Tom with us. Britt, is there anything I can do to help? It should be squared away. I promoted you to host status, so that's the top level. You should be able to do anything you want. So Brittany, is there anything I can do to help? Bear with us, folks. I will be with you in just a minute. squared away. The main thing is to get audio. I don't know if, let's see, you can, okay. I've given you full host status, so you should be able to execute any command you wish. I'll be trying host and see what I can do here. Okay.
Hey, Ken, we're ready.
All right, good to hear it. Good to see you, man. Thanks so much for showing up. I appreciate it.
Sure.
Cool, hey, hey. Good to see you. Thanks, Tom, for being here. Now, it's all yours. The floor is yours.
Thanks, guys. I'm gonna fix my wonderful shirt here. Hello, everybody. Ken, you still on there?
Yes, I am. Yeah, I'm here.
Oh, okay. I just want to make sure everything's okay. You can hear me, you can see me, and
Looks good.
everything good?
Yeah, looks good. Yeah.
Okay. And so I'm happy to go any direction you'd like me to go today. I'm sorry, just got off air, so I'm all ready to go. But which direction would you like us to take us? Which direction you want me to take this thing today?
I think the thing that can be the best service to the trading education industry is to help get these people to start, I shouldn't say these people, to help traders get more astute at trading small and trading often instead of one big trade, break it in a few pieces and go through the work and don't be lazy, guys. I mean, to trade professionally, you got to roll up your sleeves. And, you know, my best trades are always ones that have 2 or 3, at least positions I've built to make the stack before I sell it. If you can help them go through position sizing, trade management, trade small, trade often, and help get them maybe some activities to help them take baby steps toward that, I think that would be of service to them. It really would be, yeah. Because
Okay.
they trade in one trade and that's it, the trade. They said, no, it should be a sequence of trades. They don't get it, or at least a lot of them.
Okay. Happy to do that. And thanks so much for having me. And everybody that's on, thanks so much for hanging out after the market closed today. It was kind of a wild day. We closed up about 85 handles in the S&Ps and without a downtick all day. So definitely very interesting day after kind of what was a flat overnight session, a pretty flat pre-market, and then just an explosion all day without a downtick. So interesting stuff. And really, we've come a long way in the last 5 or 6 days from the lows we made about 250, 280 points ago. Just really, literally 5-6 days ago, a week ago Monday. So it's been a hell of a ride. I am just taking a look at the chat just to make sure I can see everybody. And again, thanks so much for hanging out with us. My email is tom@tastylive.com. So if anybody has any questions from today's chat, happy to answer you sometime later tonight, tomorrow, the next day, whatever. You can fire off anything you want. Nothing's off limits with me. So happy to talk to you about markets, happy to talk to you about strategy, happy to talk to you about Tasty, or anything that we do, or my own stuff. I don't care, whatever you want to ask. Love the opportunity just to meet new people and just the opportunity to have a chance to talk markets with everybody. I will try to look at the chats as they come in, just in case there's something interesting there, or in case somebody has some questions. But I'll keep it relatively general at first, and then hopefully having a little trouble bringing up the software on this particular platform, but I'm going to try to do it on a different one and get you guys so I can bring up my platform. I've been doing this a long time and it never gets old. And over the last, I want to say probably 13 or 14 years since we built Tasty, we've been doing an incredible amount of research. We basically built a think tank. When I was on the trading floor in Chicago on the floor of the SIBO for the first 19 or 20 years of my career, from 1981 to just 1999, 2000. At that point, we built Thinkorswim, and after we built Thinkorswim and we started to learn about building technology and building customer-facing technology, we sold it to TD Ameritrade, and then we went off and built Tasty Trade, the network, and then Tasty Trade, the brokerage firm, which is today, and Tasty Live is the network. And in the process of doing that, I learned a couple things that I think are super important. And when Ken reached out to me about, talking today, I said, okay, I'm going to address a couple of these things that I think are really important, that everybody should kind of understand and learn. They're my biggest takeaways from the last 13 or 14 years of doing research. And that research includes, like I said, building a think tank, which is 8 full-time researchers, all PhDs, quants, mathematicians, statisticians, data scientists, all that kind of stuff. So do a crazy amount of research every day, almost 50 hours. And surprisingly, because I'm going to simplify this for you, over that period of time, my 2 biggest takeaways are staying small and managing trades early. And I think that the crazy thing about that was, in the 30 some odd years prior to that, being in this business, what I never really understood was the value of managing trades early and the value of keeping your position size small. And I think when you go back and you think about last Monday, when we had a 250-point drop in the S&P's pre-market, and we had a 50% jump from 24 and change to 36 and change in implied volatility, a literal 50% jump. In the numbers, it looks like it's even more, but when you kind of think about when you see the high low, it looks more, but when you see the actual trading numbers, about a 50% jump. That kind of market move has only happened 5 times in the last 35 years. So going back, I'm sorry, I take that back. In the last 30 years, from 1994 to 2024, we have only had 5 instances where we've seen a volatility jump up into that 35, 36, 37 level. And the number of times that it's done it in such a short period of time, you can count on one hand. So it's a very rare occurrence. And people wrote to us all day long and were like, hey, how do I defend that type of a move? How do I defend a move where you get a 50% jump in volatility, a 250 point down, 250 handles down in the S&Ps? And how do I defend that move? And what can I do in the future so I don't put myself in a position where I have to defend that move? Hang on one second. Is this ready to, is the show on here yet? I'm just switching computers on you so you can, okay. Just give me 1 second, Kent, because I want to be able to bring up the platform so everybody can see it.
And it's a brilliant platform too. It's like by traders for traders. I could tell. Like people actually trade versus,
Yeah, I'm gonna just bring it. Just give me 1 second so I can do this thing where we can.
It lets people visualize the trade much better than anything out there. So I'm a big fan of that. So thanks. You did a good job with it. World class.
Well, this, in my opinion, is the best platform in the world. But it's because it's very stable and super fast. But let me just log on, because the main computer that I'm on here, platform wasn't compatible with this. Okay, here it is. And I'm going to show you a couple things in 1 second here. Okay, can you switch me over to this? I'm going to switch computers real fast on everybody, so just give me a quick second.
And can you let us share our screen?
Yeah, can you just let me share the screen, Ken?
Yeah, sure. Just did.
Perfect.
There you go.
It's this, but you're going to be up here.
Oh, okay.
Yep,
That's
looks good.
wonderful.
Yeah, don't use that. You're going to use this.
Oh, okay. I got it. Hold on 1 second. Let me just make this a little bigger.
This is what people can see.
Absolutely perfect. Okay. So this is great, because now I want to give you a chance so you can actually see, hopefully you can see the Tasty platform in front of you. And this will give us a chance to really make to have a better talk and to give a better idea of what essentially what I'm talking about. And I just want to point out a couple things here where we talk about markets. First thing is I want to show you where my cursor is right now. This is what the S&Ps did today. They were up 84 handles. To put 84 handles into perspective, the expected move today was about 54 handles. So the actual move today was 84 handles. Now, that is unpredictable, obviously. When we go 1.5 to 2 times the expected move, that is something that's going to happen a very small percent of the time. And generally speaking, less than 20% of the time. When we give you these expected move numbers, they work about 70% of the time. So how do you defend against something where the actual move is 1.5 to 2 times the expected move? And the answer is you stay small. How do you protect yourself against, that's the whole trade small thing. How do you protect yourself against the outlier moves when you get a move of 3 or 4% or 3 or 4 standard deviations on the opening, and you're thinking to yourself, how would I ever protect myself against whatever the outlier consequences of this? And the answer is you manage that trade early, probably before you think you should or you think you need to, but that I'm actually going to show you today that you really want to, because it reduces your chances of getting hurt on an outlier risk. And so how do you defend against a 50% pop in volatility? You stay small. How do you protect yourself against a 3, 4, 5 standard deviation move? And A, it's managed early, and B, it's stay small. And then to follow up on Ken's original request for today's discussion, how do you put yourself in a position where your expectation of some return is actually reasonable? Like you can sit there and say, hey, I want to make 2 times risk-free rates. I want to make 5 times risk-free rates. I want to make 10 times risk-free rates. All of those are things all of those are zones you can put yourself in and determine the risk you want to take. But realistically, how do you get to that point in any of those numbers? How do you get to 2 times risk-free rates? How do you get to 4 times risk-free rates or 8 times risk-free rates? And the answer is you create enough occurrences with that probabilistic outcome so that you generate, through law of large numbers, you generate whatever your expected outcome is going to be. So that's the whole concept of trade small and trade often. Trade often to generate law of large numbers and to get to a predictable outcome, and trade small to reduce a volatility risk and to contract risk or position size risk. Those are the killers. The one thing that destroys people in this business is size kills. Nobody knows what's going to happen next. Nobody really knows if a stock's going to go down tomorrow, up tomorrow. Nobody really knows what's going to happen. But what we do know is if you do something enough times and you keep your size relatively small, that no matter what, you'll be ready and back to play tomorrow. So a couple of things I think were super interesting today, and I just want to point them out. I'm going to start in this futures list on the right-hand side of the page. One was the 84 handle up move in the S&Ps. And the second one is that's about a little over a 1.5% move in the S&Ps. The NASDAQ today had well over a 2% move. It was up 446 points on a 19,000 index. So that's almost let's call it pretty close to 2.25%. That's a lot. The Russell was up 1.5%, just like the S&Ps. This is the Russell here, RTY. And I thought some of the other things just to talk about that are kind of standout performers today, if you're not used to looking at futures markets, are the VIX futures /VX. And the VIX futures were down 182. And the reason I think that's important is the VIX was down 10% today. So some people look at /VIX. And let me see if I have one up here for you to see. I don't, so I'll bring it up on the top of the page because I don't use VIX that much because that's a forward-looking index. VIX up here, you can see it was down 250, but I look at the VIX futures and they were down 180 or something, or 10%. That's the spot market. So if you're ever curious what what volatility is doing. You'll always look at the kind of true spot market, which is the futures market, which is /VX. Okay, so when we get into talking about trade small, trade often, and where do we want to be? And I think the easiest thing to look at would be to pick something like, just as an example, let's pick SPY. Because in this account, I have a really small SPY position on. Yeah, just 15 short strangles. That's a very small SPY position. And it's the equivalent of, you know, in delta terms, when you're short a $4.93 put and a $5.55 call, you're probably short the equivalent of less than, let's call it 75 shares of stock total. I'm sorry, long. I'm sorry, short. Because my calls are bigger than my puts, I'm probably short about 75 shares of stock net on balance. Now, what's interesting about this, and I want to point this out to everybody, is as you can see, I'm in September options. September options have 38 days to go. The reason that I'm not in August options is because August options only have 3 days to go. And with 3 days to go, you cannot manage positions. At 3 days to go, you have a lot of what we call gamma risk. And at 3 days to go, your positions are very difficult to control, meaning that they can go from 50 deltas to 100 deltas in about two or three ticks. If you have over here in September 38 days to go, if you want to actually employ the trade small, trade often methodology, you need to give yourself some time. Ideally, you'd like around 45 days, but I like to show just the monthlies. We obviously have the dailies and the weeklies and everything else on the platform, but I like the 38-day cycle because it gives you plenty of time to adjust the positions, gives you plenty of time to tweak your trades, and it gives you plenty of time to manage your trades, and you don't have any of the risk in the 3-day options. To put some context around this, and this is why I wanted to show this, if you have an 84 handle move with 3 days to go, you're going to get a situation, and I'm going to open this up, and I'm going to just show you something here that's pretty interesting. Instead of volume, I am going to go to something I don't use very often on here. Let me just see. Have last price. You know what? Let me just look at the. Give me 1 second here. I don't know if I can show you what I want to show you. Last price does not do it for me. No, I can't show you what I can't show you what I want to show you right here because I'm on a small screen. I wanted to show you net change. It's on a different layout. But if I showed you net change on a index that moved $8.71 today, your net change with 3 days to go would probably be in the neighborhood of $6. Your net change with 38 days to go is going to be about half of that. So what you do in this case is when you extend duration and give yourself a little bit of time to manage the trade, what happens is your portfolio risk is about 50% less than your weekly or daily risk when you're into the last couple of days. That's one thing. Second thing is, if you keep your trade size small, you won't over adjust and be forced to overmanage your positions. And the third thing is, if you do manage those trades early, you'll put yourself in a position where essentially the crazy outlier risk, like we had last Monday, was significantly reduced. Why? Because most of the outlier risk, in fact, it's almost like 98% of outlier risk happens within 21 days. It never happens outside of 21 days. I shouldn't say never, but it's only about 1 or 2% of the time. So that's just an interesting little start out lesson on how we like to position ourselves in the world of option trading with just some very simple key takeaways. A, keep your trade size small. B, make lots of trades. That's the trade small, trade often, because that gives you allows you to be closer to whatever your expected outcome is going to be. So you have expected outcome, you have reduction in portfolio volatility, and then you have the removal of 98+% of your outlier risk. And that's the best you can do to protect against crazy days like what happened last Monday or a week ago Friday. That's your protection. Stay small, manage early, create lots of outcomes. Now, there's a couple of other things that can help in those situations, going back to just a week ago when there was a vol expansion, when there was buying power expansion. And another way to protect positions is to use lots of non-correlated underlyings. Now, in my watch list here, I start off with futures, and then obviously I go into lots of different stocks. But we can talk about non-correlated underlyings real fast here, just to give you, again, a little bit of context around what that means. When you hear somebody say, hey, your portfolio should be diversified. What does that mean? Does that mean you should have NVIDIA, Microsoft, and Apple on? Because that's not truly being diversified at all. But maybe it means you should have NVIDIA, GLD, and TLT. So if you have that kind of situation where, let's just say you decided in your portfolio you wanted to go to something like a GLD, and so your GLD position, like here's a GLD position I have on, which has zero correlation, okay, to this NVIDIA position that I have on in this account. So this NVIDIA position is short 20 strangles. You know what? This NVIDIA position is short 15 strangles and long 5 put spreads. This GLD position is short 20 strangles. Those two positions have zero correlation. So if the market was to go down big, the gold position doesn't have anything to do with the NVIDIA position. If I have NVIDIA on, NVDA, and I have, let's say, 15 strangles in there, and I go to something like, let's say, QQQ, okay, where I have 15 strangles, same thing, I'm going to end up in a situation where they're going to have an 80% correlation. If you have an up market like today and you're long, that's wonderful. Okay, great. Everything worked. If you have an ugly down market like a week ago, both those positions get killed. If you want positions that will offset, you need to do other things. So maybe it's gold, or maybe, for example, you decide, hey, you know what? I'm going to do something like a currency, like the euro. I'm going to do copper. I'm going to do silver. I'm going to do soybeans. I'm going to do bonds. I mean, you can basically pick your poison. You could say, hey, you know what? I want to do natural gas. So natural gas has a correlation to S&Ps that is literally zero. And that's a situation where you can create lots of premium decay for yourself, lots of short volatility with no position risk from one taking down the other stock. So you add now, this is how we stair step and we build up the mechanics around trading. You stair step and you say, okay, I'm going to put a position on in crude oil. I'm going to put, and for crude oil, you don't have to use crude oil. For crude oil, you can use, you can use /CL if you like trading futures. And, a 2 lot in there is the same as a 20 lot in USO. So like I can have a 2 lot in here or in USO. In this case, there's an 11 lot in here. And so the 11 lot in there is like a 1 lot of CL. It doesn't matter which one you use. They move the exact same. They have the exact same implied volatility. They have the exact same implied volatility rank and everything else. What I'm trying to show here, though, is if you have a USO position and you want to offset that USO position against an SPY position, beautiful. That 11 lot in USO and that 15 lot in SPY have absolutely nothing to do with each other. And that is the beauty of this kind of a platform that lets you trade anything all from the same platform. Like, let's just say, I'll just give you a crazy example here. And let's just say I wanted to go to crypto, okay? And I wanted to do something in here, like I just wanted to do Bitcoin, and Bitcoin now is trading at 60,667. And let's just say I wanted to buy some Bitcoin just for the hell of it. If I bought Bitcoin here, just like $100 worth of Bitcoin, just as an example, if I bought Bitcoin, this is a situation where the Bitcoin would have zero correlation to the crude oil, would have zero correlation to the SPY. I'll go back to the other page. So I'm on a different account here, but every one of those three underlying assets has no correlation to each other. And if you stay relatively small with each one, that's how you protect yourself. You know, the biggest problem we have when we have huge market moves, like today up 85 points or 84 points, or last Monday, you know, and last Friday down 120, and last Monday down 190 or whatever it was, or 310 points over 2 days. The biggest problem customers have is they have too many contracts, too many units, too much correlation risk, okay, too few underlyings on, okay, and too much concentration of buying power. And the way around all of that is just some of the stuff that we discussed today. Don't be in the near-term options if you don't have to. If you're trading intraday and you want to trade, for example, I didn't trade any 0 days today, but if you wanted to trade 0 days, fine, because you have no overnight risk. So if you went into, for example, the 1 day options here, and you wanted to trade 0 days, and whatever you wanted to do, I don't care, because there's not going to be any overnight risk there. So there's not any correlation risk, but just recognize it's a big product and you might want to trade small or trade defined risk just so you don't have the buying power requirements. But a 0 day doesn't really matter, because the 0 day doesn't put you can lose money today on an 85-point move, or make money if you're on the other side of the market, but it doesn't have the overnight risk. So I don't care about those. But when you go into some other kind of a longer term play, a longer term strategy, you have to be extremely careful, you know, because you can run into a position where, you know, even a small position can move against you. I had a position on today, my worst position today, I'll be happy to show it to you. My worst position today, I came in long Starbucks, meaning I was delta long in there because I was bullish in Starbucks. But they changed CEOs overnight and the stock jumped up $20. And in the process of going up $20, my position got killed. And even though it was only like a 12 lot strangle, it lost, you know, I want to say it probably lost, I would say this position lost at least $1,000 a one lot. Yeah, I lost at least $10. I adjusted early, so maybe $12,000, $13,000 on a position where I came in delta long. So I would have thought coming in this morning, oh my God, this is a great position, and yet the stock moved too much. So sometimes, and this is the beautiful thing about options, sometimes you can have a great position on, or what you think is a great position, and you can do something totally right, like play it to the upside, and still lose money. Or you can do something completely wrong and make money. And you're like, how the hell did I make money here? Because, and the reason you made money was because volatility got killed. Or the reason you made money was because they pumped in premium. Could have been one of the two things. But you didn't have to be right on direction. Sometimes you completely right in direction and lose money because you're on the wrong side of the size of the move. The expected move in Starbucks, just to put some context around this, for the next 38 days is $6.60. It moved $20 today. It moved 3 times the expected move. It's in that 0.1% chance of it happening. That happens in trading. So how do you protect yourself? Well, I protected myself by being small, only having a 12 lot in here. And I know for some people they're like, well, that's not small. Well, yeah, it depends on who the trader is. It's relatively small for me. A normal size position might be 20 contracts or might be 250 contracts. So that's a relatively small position. On things where I feel like you can't control it, and here, you know, this is outlier risk with 38 days to go. That's weird, but it happens. So you get to see, because I don't like to show winners. I only like to show like kind of losing trades. And the reason I do that is because I want you to realize that I don't care how many years you've been doing this. I don't care how good you are at doing this. I don't care how much mechanics you follow. Occasionally, you're going to have positions that don't accommodate. You know, a day like today for me, you know, when I'm short volatility and I have 80 or 90 different underlines on, maybe 200 or 300 positions on, and 95% of them are winners because they crush volatility, and you still don't make any money because of a couple of trades where, whether it's Starbucks and a few other trades, it's like, okay, I get it. That happens sometimes in this business. That's why, again, I'm not a hedger and I'm not necessarily a spreader, but what I do like to do is I've trained myself to keep position size small. I've trained myself to manage early. I've trained myself to be non-correlated. That's why I have so many positions on it. And I've also trained myself to make a lot of trades. I think today I made, at the end of the day, I made 90 trades, which is probably a little bit above average, maybe 75 to 90, 75 to 100 is about average, somewhere in there. So maybe a tiny little bit above average. A lot of those trades on a day where the S&Ps are up 85 are all adjustments. And when I adjust, I roll up puts. I don't touch the calls. So what you see here in Starbucks is a good example. I came in short the 75 calls. I never adjusted those. I rolled up the 75 puts, the 80 puts to 95 and then to 100. So all I did was roll up puts today in there. Now, one of the cool things about Tasty is that we have functionality on here that's a little bit different than most other platforms in lots of different ways. So let me just pick a random stock just to pick an opening position. I think I'm going to take something that we haven't made too many adjustments in. Let's say a stock like Nike. Oops, hold on one second. Not sure I have a position. Oh yeah, I do have a small position on Nike. Now this is a position I've been defending in Nike since they last came out with earnings. Stock was trading about 92 or 93 when Nike had earnings, and I was sold some puts, and so that's why I'm short the 80 puts and the 87.5 puts, and I'm short some calls against it. This is a classic position where it moved against you, so you have a situation where you have to make adjustments. Well, one of the cool things we have on Tasty is this little button here. And this little button allows you to see all the trades that you've made with this particular stock. Hold on, let me just move this thing so I can see. So these are all the Nike adjustments that I made. We call this option chains. We're the only platform in the world that has this. What this allows you to do is to track every single trade you made from the time that you opened your original earnings trade in Nike. So this Nike earnings trade was a loser, but I've been adjusting it now for the last month. And now you can see it has a positive P&L of around, $4,000. But if I go back to the Starbucks position, because it got murdered today, you can see this position from going back to inception is now down 11 grand, and it was up before today. So this allows me to track. These are all the adjustments that I made to this Starbucks trade from when I originally put it on here at earnings to where I am today. So one of the things that Tasty Trade allows you to do is, without having to write anything down, without having to remember what you did everywhere, you can make as many adjustments as you want in any trade that you make. And we've now included futures in that number as well. So for example, if I wanted to, just to show you here, and I wanted to go to something like /CL, which is crude oil, I can go take a look at my open crude oil position. I can see, okay, I'm down a little over $1,000 in there on my current open crude oil position. So there's lots of different things that I can take a look at to see, hey, how are we doing on these positions? And how many adjustments have I made, and all this kind of stuff. And again, it's the only platform that allows you to kind of look back at your existing positions, see all of the adjustments that you've made on those positions, and it gives you some context and some perspective. And I also want to say there's a few other things that I think are really important since we have some time on the platform. Right now, if I was doing a new crude oil position, I would go out to September because the number of days, 35 days, is kind of in my wheelhouse. It's longer than 21. But a lot of people will write in, and again, I can't read the chat, so I apologize for that because I'm looking at a different page. But if I wanted to know where to place my short strikes, I would place my short strikes right at the expected move. So in crude oil in September, the expected move is 522. If the closing price in crude oil is 77, you're going to place your short strikes, whether you're doing an iron condor or you're doing a strangle or whatever it is, $5 higher and $5 lower as a starting point. So for example, if I went to September and we're currently trading at 77, my short strike on the puts would be 72 and my short strike on the calls would be 82. Okay. Now, these markets aren't any good because we're closed right now. So just don't pay that much attention to it. But you can see how those are going to line up pretty close. That is your one standard deviation move. That is your expected move. It's going to stay inside of that about 70% of the time. If those numbers are a little too cheap for you, you roll them up a little bit, 1 or 2 strikes, you just drag it. If those numbers are too expensive for you, you take them down from 82, let's say, to 83, from 72 to 71. And so you tweak it however you want at a starting point, which puts you at the expected move, which gives you that 70% probability of success up front, and you know where you're starting from. Once you have a 70% probability of success, you can create enough occurrences that you can decide whether I want 80%, 75%, 65%, 60, whatever it is. And all of that stuff goes into, how do I become a successful trader? And those are all really key pieces. I didn't mention IV rank yet because I didn't really have time to get into, putting context around implied volatility rank or anything like that. But what I wanted to show you on the Tasty platform, which I think is important, is stock, options, futures options, stocks, crypto, everything from one interface. We designed it that way specifically, so you don't have to go to multiple pages. Just like Ken was talking about when we first started, it is the best design platform. And we built Thinkorswim, which is a great platform. And we designed that, though, in 1999, 2000. The design's 25 years old. Tasty, we designed this in 2017. The design on this platform, same designers, they're just 2 decades, 2 decades more experience. We designed this for active traders without the bloat, far more stable, almost 10 times faster. And what happens is your positions are here. All your filled orders are over here. There's charts and quotes and details and everything else if you want to see it over here. All your working orders would be here if we were open right now. And all your futures and watch lists, everything's over here. All your positions are on this tab. Your trades are on this page. All your other icons are here. All your other icons are over here. And we have multiple trade layouts. If you don't like a table mode, you can always go to what we call a curve mode. So there's lots of different choices with respect to, how we set this platform up and what we want this platform, to look like. My preference is a table mode, but there are lots of people that prefer to do things in a curve mode because they can set up trades, in a visual sense, and they're more visual and they like to see the trades on a graph and rather than in a table mode. There is tons of functionality built into the platform that allows you to tweak the platform, adjust it, move everything around, do all that kind of stuff. So I'm happy to, at any point, if you have any questions about the platform, to answer any questions or get you in touch with somebody that can give you a software demo or, whatever we can do for you. Or answer, I'm happy to answer any questions about any topic that we reviewed today or we discussed. I wanted to keep it very high level because I know this is, Ken just launching a new venture, and I thought it would be great to kick it off with just like a kind of a high level discussion about trade small, trade often, manage those trades, law of large numbers, just the basic stuff before, like, next time we can get into kind of the dirty details and some of the nuances. When you're an active trader, there's a ton of nuances. Futures have certain nuances, stocks have certain nuances, listed options and indexes, short-term trades have different nuances. But the mechanics generally across the board and all the modeling that goes into this, it stays the same. You know, nice thing about Tasty, we have POP on the platform, and we have P50, which is probability of making 50% of max profit. We have a lot of features that don't exist anywhere else in the industry. And I think they are very helpful for active traders, specifically for option traders. This is the most active boutique platform for options in the world. It does about 3.5% of all the daily option volume. And it does about almost 6% of all the futures options volume in the world. So there's an incredible amount of trade activity that goes through this platform. So happy to, walk you through it at a different date or time or whatever you want to do. Ken, was there something else that,
Yeah, I've got a good question. An outstanding presentation, by the way. I'm clapping out loud here. When I'm thinking, say, I mean, you do maybe average 80 trades a day. I'm on my busy days, I'm 25, 30. Most of the traders, and I've worked with thousands of traders since 1999, to them, 3 or 4 trades is kind of a lot, or 5 or 6. And it's not. That's not even beginning to scratch the surface. How do we get traders? Any suggestions on baby steps they can take to get familiar with the fact that, yes, you guys have to work. It's, as a trader, it is work. You do have to put in a few dozen orders. You do have to expect to trade small often means you have to type a lot. Any way to get them from they trade 2 or 3 trades, 5 days, 5 trades maximum a day to up to 20, 30 trades? Because a lot of traders, the retail folks, to them, putting on one trade's a big deal, much less 20 or 30. And for guys like you and I, it's a learning curve for them. Any ideas of how to?
it takes a while. I mean, it's taken me 40 plus years. Of course, I come from a little bit different background than most because I did the floor trading bit for 20 years. So it seems like second nature to me. So I don't take it for granted. I think that individuals learn how to scale through doing. If one of the reasons that people don't trade that much is because they think that if they trade a lot, they're going to get chewed up with fees and things like that. The reality is that stock trading is free. Option trading is free to close. And on Tasty, there's a $10 cap anyway. You can never pay more than that. So it's actually, at 50 cents a contract in 1 penny wide markets, it is a very inexpensive business compared to what it used to be. I see people writing into the chat saying it's $25 fixed per trade. I'm not sure where you're trading, but if that's the case, you need to change. And on Tasty, futures options could be, futures options are more expensive because the futures exchanges charge pretty big exchange fees, but listed options aren't that bad. And I just think it's a function of, it just takes some time. And it's really a function of doing. There's a lot of biases in any kind of activity that you do. And to get better at anything, you just really have to, it's just incremental change.
Right.
It's just incremental adjustments. So you might start out with 2 or 3 trades, and then you might make those normally where you wouldn't adjust, you might start to adjust those trades. So you're not adding any new positions, but you're going from 2 or 3 trades to maybe 5 or 6 trades. And then you get to 10 trades. Then you find out, this is relatively easy to make a lot of adjustments. And it actually keeps my deltas in line. It actually keeps my theta where I want it. It keeps my risk and my portfolio volatility down. So I'm going to stick and continue to do it this way. And that's really where we're at.
And you've got that chain on the right too. I like that too. You got a chain of trades so people can see adjustments. That's brilliant because that's what they need to think about is trading is a sequence of trades. It's not one big decision. It's an adjustment and sequence.
Exactly.
The software facilitates that. So brilliant. That's really smart. Well done.
There's 2 questions in the chat, which I'll answer, which I just read. The first question is, when will we be in Canada? So we just did a show in Canada, actually, and we expect to be approved in Canada in September. We've been going on back and forth with Canadian regulators for almost 5 years. Our final meeting is in September. We expect to be approved in September and launch in Canada shortly thereafter. And the next person wrote in and he said, what about fixed tick slippage, like in the futures? Trading the ES, it's $25 per trade. And what he's referring to is the market width in the ES futures is 1 tick. And that one tick is $12.50. So it's $12 from the bid to the offer. Okay, it's $12.50 in the E-minis. In the micros, it's $1.25. And you are 100% correct. But don't forget that I think it's Matt who wrote this in. And Matt, don't forget though that you're trading 500 shares of spiders when you do that. So you're basically, your slippage at that point is 2 cents each way. And if you're trading 500 shares of spiders, your slippage on average is 1.5 to 2 cents. I mean, the markets look like they're a penny wide, but there's a little, they move fast. So your slippage, I'm going to say round turn, your slippage is about $20 if you're trading 500 shares of spiders, and round trip, your slippage is about $25 if you're trading ES. So they're virtually the same thing. There's no commissions in the spiders, but your slippage is going to be the exact same as the ES, and there's a little commissions in the ES. To offset that extra $5 or that little bit of slippage, more slippage in the ES, is the capital requirements. So to trade 500 shares of spiders is $250,000, fully margined is 125, and that's, let's just say it's intraday. So the opposing side to it is that your one contract of ES is, let's say, 16,000. So the difference is 125,000 to 16,000. So it's a capital efficiency thing. So for $5, $2, or $1, it's all about capital efficiency, and it has nothing to do with slippage. There's nothing you can change on the bid to offer of $12.50 from bid to offer. I mean, it's $50 a point. It's $50 a tick. I'm sorry, it's $50 a handle. It's $12.50 a tick. So there's nothing you can do about that. That's just the way it's been since the beginning of time, and that's never going to change. That's just the cost of doing business. Somebody has to be able to make a market and provide liquidity. And when you think about it, it's hard to lock in that 2 cents. It's not easy.
Yeah, well, hey, great presentation, Tom. I appreciate it. It always brings so much to the table. It gives everybody expanded tools and methods and techniques and food for thought. Traders. What do you guys think? How was today's session? And Tom, thank you very much for being here. It's an outstanding platform. How can they get started with the platform? Just go to tastylive.com, right?
No, just go to tastytrade.com. Tasty Live is the network. If you want to watch me in the mornings, 7 o'clock, tastylive.com. If you want to, or our YouTube channel or whatever else, if you want to go to the brokerage side, tastytrade.com. Just follow the steps.
All right. Sounds good. Well, thanks, Tom Sosnoff. It's an honor. And thank you very much. I appreciate it.
Thanks so much, Ken. Thank you.
Thanks, Tom. Take care. Bye-bye. So traders, what do you think? It was a rock star presentation, and great to see so many world-class educators and teachers. What did y'all think of today's session overall, big picture? What do you think? Was it a thumbs up? Let me hear in chat. What do you think? People are saying it's hard to hear me. I'm sorry. Let me change your input. Okay, is audio input better now? Just let me know. How's audio? 1, 2, 3 test. Is audio better? 1, 2, 3. Knocked it out of the park. Thanks, Matt. Still hard to hear me. Okay. Let me switch over to the webcam mic. Okay, testing 1, 2, 3. Can you hear me okay? Testing, is audio better now? Can audio come through better? Okay, great, thanks. I'm an old school guy, so I'm using an old school mic, but I was using a Getty mic. Okay, well, great. Well, thanks. Looks like good feedback. People saying yes, perfect, great show. Thanks. Half our format's great, and also having brilliant people. I learn so much from these people every time I do it, so it's a real honor. Well, I'm going to wrap up with just a little bit here. I wanted to teach you a few things. I'm not going to take long. I'll just be about 10 minutes, okay? I want to keep things on track. So here's our S&P. Now, lest you forget, how soon they forget, the market is bouncing an immediate downtrend, right? Volatility is way off the roof, so I'm going to go long UVIX, okay? I'm going to buy volatility because it's overextended, so I bought some UVIX today. Keep it on that UVIX, about 5.6 a share. Could triple in just a few days. Remember I said that. It's a brilliant call, by the way, not a trade recommendation. UVIX or UVXY, either one. Right, market has been in downtrend. It came up, it's extended during this moving average. It's at resistance, it may well fade back down. In this kind of market, if you're a swing trader, you have charts like this, right? Now, I don't know about you, but when I make a lot of money, I like trading a lot like music because you have patterns and timing, right? So I'm a musician as a hobby. You have to have the right tools for the trade, right? Like if you're going to trade, you should have Tasty Trades platform. It's really brilliant. It's really very well done. It's if you look at all the features, it's better than anything in the market by far. Not by just a little. It's like world class. So, and I've got Roland D50, Novation Base Station 2, Yamaha 49, and old school MMT8, and all the rest of it. So having the right tools for the job is important. And I have a vintage Yamaha 62 Pro tenor sax. And per Harry's recommendation, I got the TC2000 and love it as software. It's a good software as well. Anyway, here is FSUN. First on Capital. Now this has a good 45-degree angle breakout. One of my favorite patterns is this one, where you have a triple play, say small followed by large followed by even larger whole real body candles. That's a good momentum breakout signal. Small range, small volatility followed by larger volatility or range. Range is the most important thing to look at on a chart, okay? And what I mean by that is when I look at a chart, the first thing I look at is not the pattern. I look at this, the scale of measurement. Ask any trading quant, right? It's the numbers, the metrics count. So it's the stretch. How much of a stretch is there? What's the trade potential? I usually eyeball, I go 1/3 to 50% of the total range is my expected range for a swing trade. So if the range here is 34 to 44, roughly, that's a $10 range. So I'm expecting $5. I may buy up here and sell at 49 or so, right under 50. That's the round trip. So look for that pattern, small followed by large, and then an uptrend. Now, if you're in a good trade, you feel like you're in a good mood, right? It's like, it's been a long day. Yay, make some money, I'm in a good mood, right? Now, if I'm in a bad mood, so I lost money, I play the blues. But anyway, so that's one pattern to look for, increasing whole real body and look for a 50% range. Now, if you have a flag pattern, you're like Coca-Cola. What's the thing about this? The range really isn't worth trading. The range is only 62 to 70. That's an $8 range on a $70 stock. That's not really extreme enough to attract my capital. I want something that's got big ranges. So things like FSUN is good. How about 3M? What's the pattern here? So my point is, when you're scanning for charts to trade, look to the right side of the chart and see if there's enough range to make the trade worthwhile. For example, if I have a nice big uptrend, it looks great, but then I look over at the right side and the range is only 20 to 22, it's a nothing burger, right? It's not worth trading unless you need something as a beginner to trade, but 20 to 22 is not going to get my attention. The range is 20 to 30, okay, now you're talking. Okay, that's the most important thing I'll tell you today, okay, is make sure that you look for range like that. Now, if you're swing trade chart, looking at day trading, and your 1 minute chart, you're looking for relative strength. So, for example, instead of going long the spiders, right, which is $500 a share and it has a chart like this, I'll go for leverage, like our semiconductor semiconductor leverage Stoxel or something like TQs, right? So the range is better on those kind of charts. So look for things that have better range. Tom was talking about Starbucks today. It's gapped up, right? 77 to 95, right? Huge gap. Wasn't particularly tradable today, though. A little bit of wind here, a little bit of signal here into the close. One concept I want you to think about is signal versus noise, right? Where's a signal that is actually tradable versus noise? It's been my experience in training thousands of traders, literally thousands of traders since 1999 when I first started day trading university from a condo in Waikiki on Alloy Canal. Is in a 31st floor, beautiful view of Diamond Head. Anyway, what I learned was over the last 25 years, range is important, multiple trades is important, scanning is important, and not over trading. Also important though is not under trading. You're under trading if you only put on a single position. Instead of buying 500 shares, maybe buy 5 100 share lots or 200, 200, 100. And break it up into pieces. All right. So range 11 to 13, that's tradable. 11 to 12, not so much. Or a bounce for UVIX I'm looking for. looks like terrible. Volatility, by the way, you buy volatility low and you sell high. So when it's ground down, it looks like it's gonna not go any further, and then it keeps going down. You buy, and then it spikes up on a down day and do really well. Now, continuous charts, I guess one last note here before we wrap up. One of the things you look at is whole numbers. Now, you may have seen my articles, Trading on Momentum and Technical Analysis of Stocks and Commodities. Thanks to all of you who voted me #1 author in the world back in 2 years ago. I think it was 2019. It's been a while. Anyway, and I'm resuming as a columnist, so look for my articles in Stocks and Commodities magazine, starting the issue after next. So I'll be there for you guys and publishing as well. So hope that you guys do well. Let me give you, let's see, some last information here. Last thing to cover. And my live, if you want to learn with me, go to daytradinguniversity.com/live, and that has a special that I did have at an open house, and the special ended on Sunday. But since you guys are here, I will extend it for another couple of days. The live room, I've got a discount on that. And it's really good because unlike other people, I actually trade, and also, here's I prove I trade. That's an aha moment. How many other educators in the world show tax return proof that they really trade? I think it's a little important. I mean, you would go to a golf pro and say, hey, show me how to golf if the guy can't show you in front of him, you know, the guy can actually golf. Why would you trade it? Why would you trust an educator who can't prove they trade? Trade them in for me, okay? I'm the go-to guy because I actually really trade. I did 124 million worth of order flow. I've learned a few things, okay? I've got the experience, I got the chops, and the tax return proof to back it up, all right? I only did 41 million in 2021 as a lighter year. More recent year was 22, and I did just over 124 million worth. So we got lots of experience. The room is relatively inexpensive. It's a good value. You have my word on it. Certainly guarantee your satisfaction, and happy to work with you guys. So if you want, we got lots of testimonials and all that. Video testimonials count. Anyway, live room, do give it a shot. daytradinguniversity.com/live, and I'll be there to work with you guys. So take care and best wishes for an outstanding session. And thank you for being here. Our next one's coming up in a few weeks. We'll have other people as well. So looking forward to seeing you next time. Until then, trade smart. Trying to do what these people say. Really smart speakers today. So thanks for being here. I'm going to wrap up with a little music, and I will see you guys later. Peace, I'm out. Microphone drop. Yes, okay, been a great audience. Thank you so much for being here. I'll see you next time. Buy all our stuff. We're all good people that actually learned how to do this. So do well, and I will see you guys when I see you. Take care and best wishes for success in your trades. Bye.